What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to create something great. Now, today I'm really excited what I have planned for you all today. We're going to be creating another algo strategy but this time we're going to be using a candlestick pattern. And with this candlestick pattern we're going to be using is the shooting star. So I wanted to see if this strategy has edge. I wanted to see if this is able to keep up with the other bots that we've created here with y'all. So I'm super excited for this to be able to happen. If you stick around for the whole video, you're going to see some of the edge I'm going to be adding to the strategy, so it can definitely have that boost in order to do what it needs. So, and before we even get started, I want to go over a few things. So the few things I want to be able to touch on is an option contract. So here at Creative Coder, what we do is not only algo trading, we do AI agents, machine learning, whatever cool coding project I'm working on. I want to bring it to y'all so you can see my process and see how I go through being able to create the code step by step. I'm completely new in this. I've only been doing this since April of this year, so give or take about 7-8 months, right, of me being able to understand coding. So I hope you all enjoy, and let's go ahead and get started. So what I'm going to talk about today, again, we're building an option algo strategy using the shooting star candlestick pattern, and you're going to see me walk through this step by step. I do use Claude Code, we are going to be using Cursor. That is my code editor, and with inside Cursor I'm going to be using Claude Code. In addition to that, I'm going to be using ChatGPT in order to flush some of the ideas out. But before we get there, let's go ahead and build the basis of options, option contract, call options, so on and so forth, so you can understand what I'm talking about when I'm going through the process. So this will take about 10 or 15 minutes, so let's go ahead and jump in. So what is an option contract, right? An option contract is like a ticket that gives you the right but not the obligation to buy or sell a stock at a specific price, right? And that specific price is a strike price. So let's go ahead and change the color there so we can make that stand out before a certain date, and that certain date is our expiration date, right? So what is an option contract? An option contract is like a ticket that gives you the right but not the obligation to buy or sell a stock at a specific price, right? And that's our strike price before a certain date, right? We don't own the stock yet, right? We get to choose if we want to buy it or sell it later, depending on what the market does, right? Let's even break this down to another simple analogy. So imagine we buy a concert ticket for $100. Even if the ticket resale price jumps to $300, you still get to use the $100 ticket or sell it to somebody else for a profit. What would you do in this instance, right? Will you keep that and go experience that concert, right? Or will you profit the $200 because it just jumped to $300? For me, in my house, I'll just catch it on YouTube. I'm not gonna hold you, so I'll profit that little $200. But let's keep going, right? So the ticket is the option, the concert date is the expiration date, the ticket price is the option premium, and the concert seat is the asset, right? You can either buy or sell it. So option isn't ownership, it's control, right? It's control. We're paying for okay, let's make that. All right. We're paying for the right to choose what to do later based on how the market moves, right? And we're going to be buying one of two options, right? Depending on how the market moves. Before we get there, we all know that for every one option contract, there's 100 shares. So let's put that to stand out. All right. So we're going to be buying one of two options. It's either going to be a call option. And the reason we're going to buy a call option, this is the right to buy a stock at a set price, right? That set price is that strike price, because we think that the market might go up. So if we buy a call option, we're bullish on the markets. What does bull have? A bull has, right? Bull has horns. What does those horns do? Those horns point up, right? So if we're buying a call option, we're bullish. That means we think that the market is going to go up. The market or the price is going to go up. Now, usually when it comes to call options, right? When the stock price goes up, the call option goes up. All right. So let's go to put. A put option is the right to sell a stock at a set price because we think that the market might go down, right? So a put option equals we're bearish. 80% of the times, bears walk on down, right? Bears walk on their paws, right? So bear down, right? So bearing down means that we think that the price of the market might go down. So we're bearish on it, right? And normally when a stock price goes down, put options go up. Right. So I'm going to touch on volatility, implied volatility, but let me just touch on it now since we're already here. So volatility, so that does that make sense, right? Do y'all have any questions while I'm going through this now? If you do, go ahead and drop a comment and I will definitely answer. And again, what we're doing right now is laying the foundation. So when we do get to our strategy, it's a lot easier to be able to understand what I'm talking about and what I'm saying. So let's keep going. Volatility, right? Volatility is what the market is currently doing right now, not in the future. So the way that we gauge volatility is one of two ways. We can use VIX, right? And VIX is a volatility index that allows us to be able to gauge. I always wonder, what is this right here? So I'm using trading view, and with inside trading view, these are candlesticks. We're going to jump into this a lot today so we can understand candlesticks, right? And each one of these candlesticks represents 1 minute of action between buyers and sellers, right? Now every candlestick tells a story, right? So let's start here. I was just looking at this little lightning bolt, and this lightning bolt is letting us know, hey, latest update, stock closed down this week as valuation shut down. Oh, the government shutdown, right? So it just gives you different updates on what happened. So that's interesting. I'll get into that a little bit later, but let's just talk right now about the candlesticks. So with the candlesticks, again, remember each one of these candlesticks tell a different story between the buyers and the sellers. Now, normally when we see a red candlestick, right, that lets us know that the sellers have won that battle. And because what they're bearish on the market, right? So what they want to do is be able to drive the price down as much as possible. So when we see that red candlestick, we're seeing that, okay, the sellers won. So the bears won in that particular market. But when we're seeing a green candlestick, right, this lets us know that the bulls won. So the bulls want to be able to push the price higher, right? So a green equals bulls, a red equals bears, right? Now you see these wicks here. Let me just get out the way, but you see the wick that's pointing out this candle right here. This lets us know, and it's that we're going to talk about the difference between the green wick and the red wick and the green wick. So this red wick lets us know that the bears, right, or the sellers tried earnestly or very hard to be able to push this price down, but it was rejected. So whenever you see prices are rejected, right, you're going to see these long wicks form, right? So it tried to hit support. And remember support and resistance? We always talk about this, but let me bring it back up. Support is the floor, right? Support is the lowest price that the current asset is at, and the resistance is the roof, right? So we want to be able to buy a support, sell at resistance, meaning that you buy low and you sell high, right? So resistance is the roof, support is the floor. So when I say it's crashing through support, it's meaning that it's going through the lowest lows right now is one and be able to get a lot lower. So that's when we talk about support and resistance. All right, beautiful. Let's keep going. So what this tells us in this particular red candle is that the bears tried to break through support, but it was rejected. So we see this wick here. Same thing happened here with the bulls, right? The bulls tried to break the resistance, but it was rejected because you see that wick, right? So what I want us to be able, volatility. So what the VIX index allows us to be able to gauge is how volatile is the market right now, right? What is the market expecting? Is the market expecting a big swing? Is the market expecting things to be calm? Is the market expecting a bearish rally, right? Is the market expecting a bullish rally? So what VIX allows us to be able to do is capture a real-time gauge of what the market is, right? What the market is doing. So as you can see right now, VIX is at 1908. So a VIX between 10 and 15, we're talking about calm markets, right? Markets are a lot stable. People are not expecting a big swing one way or another. But a VIX between 15 and 25, we're going to talk about a little bit elevated, right? People are expecting a big move, either that be bearish or bullish. And a VIX north of 30, we're talking about high VIX, right? We're talking about big moves, either bearish or bullish. Now, VIX is based off SPY. And remember, SPY is the S&P 500. It is the top 500 companies within the New York Stock Exchange. Now, VIX and SPY has an inverse relationship, meaning that when we see VIX go down, we're normally going to see SPY up, right? And when we see SPY down, we're going to see VIX up. Now, that's about 85% of the time. There is instances where the volatility in VIX definitely helped SPY. So when we're talking about volatility, right, we do have a tool or a resource that we can go to be able to get real-time gauge on what that volatility is. So I would like to consider this like one of these secret tools that most traders are not using, or some are, right? So let me not make a blanket comment there. So this is one of my secret tools that I use in order to understand, okay, what is the volatility in the market? So when you hear VIX a lot, right, that's the volatility index, and we're going to be using this in order to create our strategy. So let's keep going. So remember, VIX is that real time. Volatility is the real time. It lets us know what's going. Oh, you can't not see that. My fault, fam. So it's real time. It lets us know what's going on in the future, right now, right? Not typically in the future, but right now. Implied volatility, right? Implied volatility has to do with the underlying option contracts themselves, right? So implied volatility is what the market expects to be doing happening in the future, usually within the next 30 days, right? High IV, we're in an expensive option contract environment. Why? Because market expects, expects a big move to occur within 30 days. Low IV is affordable option contracts. Why? Because market is calm and stable and no big moves expected, right? So when we talk about high IV, right? High IV, and again, IV, implied volatility, has to do with the underlying option contract themselves. So every option contract has a different IV. That would make sense, right? Because a call option contract is not going to have the same IV as a put option contract. You can even get more granular, as a 650 call, right, is not going to have the same IV as a 630 call, right? And the difference between those two is the strike prices, right? And remember, the strike price is the price that that's that specific price, right, that we're going to pay before the expiration date, right? So one more thing I want to be able to talk about is in the money, out the money, and at the money. So once we cover this, we can definitely dive into the strategy. So when options are trading, moneyness tells you how the option strike price compares to the current price of the stock, ETF, or ETF like SPY. And SPY is an exchange traded fund. So that's what that ETF is. An exchange traded fund is so think of an exchange traded fund like a quilt, right? So you know how a quilt has different patches. So an ETF, with those, instead of having a patch, is a company, right? So SPY has 500 different companies within their ETF, right? So that's why I love using SPY. So here's an example of some of their holdings within SPY. We have NVIDIA. And if you can't see this, let me know, and I will zoom in. Okay. We have NVIDIA, we have Microsoft, we have Amazon, Broadcom. This is Google. Don't ask me why it's alphabet A. Somebody loved it and was like, you know what, we're going to run with it. So this is Google. This is Facebook. This is YouTube. Again, they love the alphabet. So this is A. This is C. This is YouTube. Of course, Tesla and Berkshire Hathaway, right? These are just the top 10 holdings of 500 within this ETF. So the reason I really love using SPY is because of diversity, number one. So if we wanted NVIDIA, that means I would have to go buy NVIDIA. If I wanted Apple, I have to go buy Apple, right? Instead of having to go buy these individual stocks themselves, I just like to trade SPY because it gives us we're vested within these companies, right? Just by trading SPY, our ETF, our exchange traded fund, right? And this ETF has 500 different companies within it. So that's why I love using SPY, right? So let's go back to the money. So we're going to talk about in the money, at the money. So in the money, out the money, and at the money, right? So for this example, we're going to say our current price of SPY is $4.98, right? So SPY, remember, is the S&P 500, is the top 500 companies within the New York Stock Exchange. So let's say we were to purchase a call of 501, right? So our 501 call is currently out the money because it's 2 or more levels up for calls. Now, this is for me in my house. I've heard schools of thought where people go 3 levels, 5 levels. The highest I heard was 10. I think that's a bit ridiculous, but I think 2 to 3, maybe even 5 is kind of pushing it, but like 2 to 3 is okay. For me in my house, it's 2 levels, right? For moneyness. And again, just follow me and you're going to be able to understand. If you do have any questions, please go ahead and let me know and we'll definitely answer them while I'm going through this. So for out the money, this is currently out the money because this is 2 or more levels up, right, for calls. So the current price is $4.98, excuse me. If we were to buy it at 4.99, this is in the money, right? So this is super close. These are super close to the current price, right? So these options here are probably going to have a higher IV. Reason being so is because number one, it only takes $1 or $2 maximum to be able to come to the 4.99 and the 500, right? But when we're talking about out the money, these are $2 or more up from the current price. Levels, dollars, right? Those are interchangeable, but here I'm going to use levels, right? And so that's out the money for us. So out the money for when the current price is 4.98 is anything greater than or equal to 501 for calls. Now let's go to puts. Does that make sense? All right, perfect. So let's go to puts, right? So again, the current price is 4.98. If we were to buy 4.97, 4.96, these are both still in the money. For out of the money, we would have to buy anything less than or equal to the 4.95, right? And that's out the money. So at the money is the current price. So let's break this down. So if we were to buy 4.98, that's at the money. Like we're already winning. Kind of doesn't make sense to buy an option contract that's already at the money, right? So what we want to buy is a little bit further out of the money with the hopes that that out of the money contract becomes at the money. So if we were to buy the 4.95 put, the hope is that 4.98 drops down to 4.93 or less than. If it drops to 4.96, okay, we make a little bit of money. 4.97, a little bit of money. 4.96, a little bit more. 4.95 and anything less, okay, now we're really making it when it comes to puts. And therefore, it's the correct as well. If I'm buying 501, I want the current price to jump up to 501, right? 4.99, it's okay. 500, all right, let's see if we can move a little bit more, right? Anything greater than or equal to the 501, now we're winning for this particular call. So we understand the moneyness part of this. All right, perfect. Now we're going to jump into Claude ChatGPT to be able to start to build out this strategy, right? And I think one of the things we have to understand is that, yes, I gave you a brief synopsis of the underlying candlesticks themselves, but sometimes I'm not going to hold you. I get myself a little bit confused, right? So what I want to do is, can you please explain candlesticks or stock / option trading and explain like I'm 12 such that we are able to truly understand how it works. So we're going to go over the candlesticks, and once we understand the candlesticks, then we're going to start building out the strategy, right? But again, I want us to understand the candlesticks truly, because our strategy is what? Is a shooting star candlestick pattern, right? So I'm going to talk about this before I even get to that shooting star candlestick pattern. Like I want us to be able just to really break down the candlestick. Then once we break down the candlestick, let's understand what's going on. All right, so what is a candlestick? A candlestick is a picture of what happened to the stock price during a certain time, right? And the certain time that we use is 1 minute. It is like a story between the buyers versus the sellers, right? Each candle shows 4 main things: the open, the price when the time period started. This is the starting line. The close, the price when the time period ended. This is the finish line. The high, this is the highest price it reached during that period. This is the peak of the mountain. So that's the resistance if you want to talk about high, right? And the low is the lowest price it reached during that time, the valley floor, the support. So the difference between the colors is green equals the price went up, so it closed higher than it opened. So when we have that green candle, right, that means, we're going to talk about this doji right here, right? Because yes, it is a green candle, but it is a little bit more indecision. So this doji lets us know that the buyers and sellers were in all-out war. They fought, then they got exhausted. But the buyers came in and won, but it didn't have this nice little green big body candle here, right? There was a bit of indecision, right? Even though that the buyers won, there was still some indecision there, right? So let's talk about, again, green. We see the buyers won, nice candle, right? And then the red, let me just use these two as an example. Boom. Red, sellers won, so they're bearish. Green, buyers won, so they're what? Bullish. All right, so let's keep going. The shape tells each story. Each candle has a body between the open and the close. The wicks, right, are the shadows, or we're going to call them wicks. I haven't heard somebody refer to them as shadows, but if they do, they're talking about the wicks of the candles, right? And remember, the wicks are the things that are poking out, right? So again, green body wick lets us know that it was trying to test resistance and it was rejected. Red body wick, that sounds like a song. Green body wick, red body, no, sorry. A red body wick lets us know that was testing support levels and it was rejected, right? All right, let's keep this thing running. So wicks, think of it like the battle. The body shows who's winning. Buyers are green or the sellers are red. The wick shows how wild the fight got before it ended. So an example, so let's say we're looking at a 1 minute candle of the Apple stock. It opened at $100. Then it went up to 102. That's the high. Then it dropped to 99. That's the low. All in a minute. That's crazy. 60 seconds, whoa. Then it closed at 101. The candle would be green because it closed higher than it opened, right? It opened at 100, 101. So in that manner, the buyers pushed the price up, then the sellers pushed it back down. So the buyers were trying to test new resistance, right? Then that resistance was rejected. Then the sellers was trying to test new support. That support was rejected. So this is when you're going to see those wicks form out. This is going to be a wick north of it. This is going to be a wick south of it. And this is where it's going to close. All right. Candles forming pattern. So this is what we're doing, our shooting star. So when you line candles up, you can start to see patterns, and that's the hint of what may happen next, right? A bullish engulfing pattern is a big green cap pattern, eats up a small red pattern. Buyers are taking control. A shooting star, right, is a small body and a long top wick. Buyers tried, but the sellers took over. A hammer is a small body and a long bottom wick. Sellers tried, but the buyers fought back hard. And a doji, right, is a tiny bottle, tiny bati. The open equals the close. Market indecision. No one is really winning yet. So for stocks, when you're buying we already know what a stock is. We already know what options are. All right. So let's say you're watching Tesla and you see a hammer candle form after a drop. Buyers are fighting back. Then you think it might bounce up from here. You buy a call option betting that Tesla will rise over the next few days. If you're right and it rises, that call option becomes more valuable. If it keeps falling, your call option loses value. Why candles matters in option trading. Options move based on where the stock price is going and how fast and how volatile the market is. Candles help you see the movement before they happen. It gives you clues like, are the buyers stepping in? Are the sellers taking over? Is the market unsure? All right, so our cheat sheet. Open is the price to start. Close is the price at the end. High is the highest point. Low is the lowest point. Green candle is the buyers are winning. A red candle. So green candle, bullish, buyers are winning. Red candle, bearish, sellers are winning. Long wick, a volatile move, right? Either to the support or resistance that was rejected. A small body is uncertainty. A hammer, buyers fought back. A shooting star, sellers fought back, right? What I'm going to do based on this, shooting star and hammer. Stick strategy. So I forgot to put that. I'm sorry. It's not only just the shooting star, but it's the hammer strategy as well. All right. Because check me out. A shooting star lets us know that the sellers fall back, right? If the sellers fall back, what does that mean? We're bearish, right? So I just don't want bearish moves. I also want a bullish move as well, right? So the hammer lets us know that the who fought back? The buyers fall back, right? All right. Now let's really break this down. Can you break down the difference between the hammer and shooting star candlestick pattern and how they can be used together to figure out how they can be used together for a potential option algo strategy? All right. So the hammer versus the shooting star, the mirror twins. That's funny. So both show a fight between the buyers and the sellers, both in opposite directions. I got the game I got to turn on. So the hammer is after a downward trend, right? Buyers are fighting back, and the small body on the top and the long bottom wick, right? And then the buyers is a bullish reversal is happening here. So whenever we see a hammer, this happens after a downward trend, and we're expecting a bullish reversal to happen, right? We're expecting the market to pop back up whenever we see that hammer. When we see a shooting star, this is after a upward trend. Sellers are fighting back, and this is a small body on the bottom and a long top wick. Sellers are in control, and this is going to be a bearish reversal, right? So this is a hammer, small bottom near the top, small body near the top, small body near the top. The price dropped low, and it's a long bottom wick, and the buyers pushed it back. So let's see if we can go find a hammer. So small body near the top, right? Long wick. We have two hammers right here, right? Small body near the top, long wick, right? So sellers were trying to push it back down, but the buyers said, no, not over here, not in my house, right? And they're holding control, right? So this is letting us know that we're having a bullish reversal about to happen. Didn't that happen? Boom, boom. Ain't this is the start of a bullish reversal, right? So this is letting us know, oh man, this strategy may work. You see two hammers, boom, boom, bullish reversal, right? So this is a shooting star, right? A small body at the low of the candle, long wick, right? This lets us know normally that this is going to be a bearish reversal, but it didn't happen here. Now, again, candlesticks aren't 100% guaranteed, right? Meaning that like there's still going to be times that it's like, oh, okay, this is supposed to be a bearish reversal here, but it didn't happen. You have a basically what happened here is a bullish engulfing candle, because we have that big green candle here and engulfed, right, this small shooting star here. And then what happened? We had two hammers form. And these two hammers form, letting us know, okay, the market is really convicted that we're about to go into a bullish swing. All right. So that's what the candlesticks are telling us. So that's why I want us to be able to understand the candlesticks. And once we understand the candlesticks, I'm telling you, like life when it comes to being able to algo trade or just trading in general is going to be a lot easier because you can understand what's going on, right? Yes, we're going to automate this in the sense like we're going to write code to be able to do this for us, but you still want to understand what's going on, right? All right, so we talked about the hammer. We talked about the shooting star. Right, so the price dropped a low bottom wick, but the buyers pushed it back up before closing. Translation: sellers tried to crash it, but the buyers said, nope, not in my house. Right, so price went high, long top wick, but the sellers pushed it back down before closing. Buyers tried to pump it, but the sellers slapped it back down. Psychology is a hammer is capulation. Weak hands sell, strong hands buy the dip. Euphoria fade. Shooting stars a euphoria fade. Buyers run out of steam. Sellers start shorting. So there are signal candles, but not confirmation. You still want to wait for confirmation and the candles after them. So how to use them in option trading strategy? Let's turn them into simple reversal detection algorithms for option trading, where we can combine the shooting star, the hammer. It said hammer, not still so shooting star. The hammer plus the shooting star logic to identify turning points. So the pseudo rule. So if the lower wick is greater than or equal to 2 times the body size, and the upper wick is less than the body size, and the close is greater than the open, the pattern equals hammer. Shooting star, if the upper wick, right? So we're starting to get into code little by little here, right? So this is how we're going to start building it out. And as soon as we get to Claude Code, you all are going to see how like it takes it and then it really breaks this down for us. So let's keep going. So a shooting star is going to be if the upper wick is greater than 2 times the body size, and the lower wick is less than the body size, and the close is less than the open, the pattern equals shooting star. Confirm the move, the second candle rule. So if a hammer For a hammer, wait for the next candle to close above the hammer's close. That confirms the buyers have control. For a shooting star, wait for the next candle to close below the seller's close. That confirms the sellers are in control. Step 3, the setup. Next candle close higher, buy a call. I'm doing 0DTE, not 2DTE. The reason I want to do 0DTE, this is 0 days to expiration. These options are expired the same day. So we're going to do 0DTE, not 2DTE, not 2 days to expiration, right? Profit target 20 to 40. So we're going to get there. Risk. All right. So what I'm going to do is I'm going to take these, and then we're going to start to build out our strategy by hand here. All right. So we're going to call this twin mirrors. Twin mirrors strategy. I don't even think I spelled that right. All right. Nope. Strategy. All right. Beautiful. So we got our twin mirrors strategy that we're going to start to build out. What I want to do, number 1, too much red. Let's make you black. Just listen to me. Thank you. Beautiful. Let me get this organized. 2 seconds. 2 seconds. All right, step 2. Beautiful. All right. What do I want to do? Okay. This is what I want to do. All right. So we talked about the bearish. Okay, the hammer, the shooting star, confirm. So this is how so how we're going to enter. This is how we're going to enter the trade. Enter the trade. This is what triggers the signals, right? So first one, we're going to see, all right, is the lower wick greater than 2 times the body size, and the upper wick is less than the body size, and the close is greater than the open. This equals a hammer, right? And for a shooting star, a bearish reversal, right? Should have highlighted. So let's do bears, and then let's do bulls. So a bearish reversal is if the upper wick is greater than 2 times the body size, and the lower wick, the lower wick is less than the body size, and the close is less than the open. This is a shooting star. We're going to confirm. How we're going to confirm, excuse me. I ain't want to cough in your ear. So give me a second. All right, let me just put that game on. All right, so for a hammer, we're going to wait for the next candle to close above the hammer close, and that's let us know that the buyers have control. And then this, we want to buy calls slightly OTM. Remember, out of the money, 0DTE. This is a new term. We didn't talk about this one yet. So 0DTE, let me put this here. 0DTE is 0 days to expiration, meaning options that expire the same day. So same day option contracts, right? And you're going to see why I want to use 0DTE. All right, slightly out of the money, 0DTE calls. So if we see the next candle, right, we're going to wait for the next candle. If the next candle closes above the hammer close, right? Again, this is how you build out a strategy, people. If it closes above, right, the hammer close, then this confirms the buyers are in control, right? And now we want to be able to buy our call contract, right? A slightly out of the money call contract. But for a shooting star, we want to wait for the next candle and wait to see that it closes below the shooting star. This lets us know that the sellers have control, right? And then we want to buy out the money, 0 DTE puts. Let me just get a little synergy here. There we go. 0 DTE puts. Okay. Now, so this is how we enter the position, right? So does that make sense, right? So we're waiting for the hammer, the bullish reversal to form. We're waiting for or a bearish reversal to form, right? And this is how we're going to confirm it, right? Let me just put our or, right? So this is what triggers a signal, right? Once we see it, right? Do y'all have any questions? If you do, let me know and I can answer it for you. So this is what triggers the signals for us to be able to go. All right, so let's keep going. All right, next. So this is how we're going to take profit. Or before that, what do I want to talk about? Yeah, let's talk about take profit. So this is how we're going to exit the position. So take profit 1. So TP equals take profit. So TP1, 68%. I want to explain it. TP2, 48 or 58. Let me do 48. 48%. TP3, 28%. Hold on. Max hold time equal 12 minutes. And then stop loss equals 20%. All right. So the way that we're going to exit our position, hold on. If any of the following occurs first, exit. Well, all right. So this is how we're going to exit our position, right? So if the take profit, if we hit 68%, 48%, 28%, exit. Either one of these happen first, exit, right? Full exit. Full exit, no scaling out, all or nothing exit. Because I just want to make sure that we're clear. We're not scaling out. As soon as I hit 68%, exit. If I hit 48%, exit. If I hit 28%, exit, right? Excuse me. Maximum hold time is going to be 12 minutes, and our stop loss is going to be 20%. Now, let me break down the stop loss, and how I'm going to break it down is with this next little part here, and so you can really understand it. Position management. Oh, wait. Portfolio management. Excuse me. All right. So the starting balance is $100. So all of our strategies, unless told otherwise, all of them are going to start at $100, right? Because we want to be able to dispel the notions that you need thousands of dollars in order to trade options. No, right? So all of our strategies, unless told otherwise, is going to start at $100. All right. Now, if balance is less than $4.99, can use up to 80. Let's do 84. I'm going to be a little weird. 84% of the portfolio balance. If balance, this is like, we can write this as code almost. If else, balance is between 500 and 1K, can use up to, let's do 60. No, let's do 50. 50% of portfolio balance. If else, balance is greater than, I could put greater instead of writing that out. Greater than 1K, can use up to 20% of portfolio balance. Only one position at a time, only one trade per day. So I hope you're getting the pattern here, right? So all algorithmic trading is a sets of sets of rules and instructions that we're going to code, we're going to train, then we're going to deploy such that it can follow these rules and instructions that we have laid out. Right. So that's all an algorithm is, right? Sets of rules and instructions such that it can buy and sell whatever that underlying option is, right? Or whatever that underlying asset is, right? So you're getting it? All right, perfect. If you do have any questions, please let me know. So we have our starting back. Okay, stop loss. So we're starting with $100, right? So what this stop loss lets us know, SL. So SL equals stop loss. So what this stop loss is letting us know is that, again, we're starting at $100. If the portfolio gets down to $80 at any point in time, right? Exit the position. Do not stay in a loser, right? So this is our risk mitigation, right? This is letting us know that, okay, if we're down at 20% at any point in time, exit, right? So this is kind of, it's not as tight. It's not as constrained. I mean, we could drop it down to 15. 15 is super tight. 10 is even tighter than that, right? What we want, because we're doing 0DTE options, these options tend to have a lot more volatility than 1DTE, 2DTE, right? So we want to be able to give it a little bit of room to breathe, and that 20% is more than enough room, in my opinion, right? Maybe I'll go up to 22, right? But if I can drop that to 15 and still win, that's a winner in my book. All right, one trade per day, perfect. Session is session for strategy. Let's do strategy only trades between 9:32 a.m. and 11:59 a.m. So we're missing the first 2 minutes, and I'm not going into the afternoon. Between, okay, strategy. All right. What else do we have to talk about? So we have how we enter the trade. We have how we exit the trade. We have our portfolio / position management, right? Only one position at a time, only one trade per day. This is kind of redundant. Let me just put one trade per day, one position at a time, one trade per day. That makes sense. I'm going to do one trade per day. All right. Let's see what else we need to do. We already see, I have my stop loss. Stop loss is 20%. We already have our take profit. Avoid trading major news, first 5 minutes. We already have that. Ideal confirmation. So here's the logic. Cool down, optional. Oh, who are we using? Do I want to use this for QQQ or SPY? Since I've been looking at SPY, and we've been talking about, but hold on. So let me show y'all a few of our bots that we have already, fam. So here's a few of our bots. I think this is 8 that we've created already, and all of them have been here with y'all. So we have our Fade Bear bot. This is the Contrarian. This is a bear market bot. We have another Momentum Chaser. We have a Scalper bot. So SPY, S&P 500, S&P 500. We have QQQ. I haven't touched on that yet. QQQ is the top 100 tech companies within the NASDAQ. And the reason I like to be able to scalp QQQ is because these are all the top tech companies. So this isn't, let me show you instead of just, hold on. QQQ Holdings. Let me make sure I got to change the page, and I'm pretty sure I did. If I didn't, all right, QQQ Holdings. So this is QQQ. We have NVIDIA, we have Apple, Microsoft, Broadcom, Amazon, remember, Google, Tesla. This is YouTube, Facebook, Netflix, Costco, Palantir, AMD, or Advanced Micro Devices, Crisco, Micron Technology, T-Mobile, Lam Research, Intuitive Surgical Incorporated, Landed PLC, Pepsi. You get the point. Shopify, Qualcomm, Applied Material, Intuit, Agman, Intel, KLA, Bookings, Bookings.com, Gilded Sciences. So you get it, right? QQQ gives us the top tech companies that are within the NASDAQ. So the reason I like to use QQQ instead of having to buy all those individual companies, QQQ is another ETF that allows us to go pick up the top 100 tech companies. So that's why I like to build strategies based off that, right? So we have a couple that are based off that. So we have our, where is it? Our Momo strategy, that's our scalper that uses QQQ. Lotto, this is a spy bot that trades the S&P 500. It's a smart gambler. We have another sniper. This is a scalper and a sniper. So two different ones, right? For QQQ, a time strategist. Then we have Bel Air. This is the sprinter. Then we have Star Baby, a reversal specialist. And then we have Penny for you. And this one we just created earlier this week. This is our smart breakout hunter. Right. So as you can see, let me see. 1, 2, 3, 4, 5, 6. So I have 6 bots that do. Okay. We're going to use QQQ for this one because that's over. I'm going to get another QQQ bot. So we're going to use QQQ and VXN for this strategy here. So I like it. So we're going to use, hold on. I just got to keep remembering to clicking over. I'm not going to hold you. Okay, there we go. We're using QQQ for QQQ 0DTE puts, calls, and puts. All right, so let's get this over. Now what I want to do, okay, perfect. I'm gonna go back to ChatGPT real quick. All right. Twin mirrors. Now let's begin to continue to flush out this strategy. Here is what we came up with so far. So y'all are seeing my process, man. Excellent. We're officially shaping the twin mirror strategy, and it's already gotten a clean logical core. All right, twin mirrors strategy, asset QQQ, 0DTE, calls or puts, capture these short-term momentum reversals from the micro exhaustion points using the mirror logic hammer plus shooting star. The concept summary is the market behaves like a mirror. After aggressive selling, a hammer forms, buyer mirrors back the upward momentum. After aggressive buying, shooting stars form, sellers mirror back the downward momentum. We trade those reflection points using the confirmation candles to avoid false signals. Step 1, this is how we enter. The confirmation, this is how we exit. All exit, all or nothing, no scaling. TP can act as a dynamic exit point. Whichever reaches first ends the trade. The algorithm can be configured to monitor the live percentage, premium change, and exit when any of those thresholds hit. Stop loss 20%, max hold time is 12 minutes, exit no matter what. So we exit the trade if the TP, take profit, or stop loss is triggered, the time exceeds 12 minutes, the signal window ends, or the opposite signal is detected. Optional safety filter, maybe. A portfolio 84, 50, 20, only one trade per day, whichever signal hits first. No signals by 11:59, then no trade for the day. Optional, no. Volume spike, I'm not using that right now. I'm not using RSI, that's a lagging indicator. I'm not using average true range, that's a lagging indicator. Cool down point, wait 3 to 5 candles after exit before next entry. Nope, it's only one trade per day, so I don't need that. Scenario at 10:05, after a 5-minute drop, a 1-minute hammer forms at 438.50. At 10:06, the next candle closes above the hammer confirmation. The Algo buys the 0DTE slightly out of the money calls. The 440 calls using 84% of the $100 balance. The premium rises 48% in 8 minutes. Auto exit. Trade close, done for the day. Shooting star scenario, a 10:40, after a quick rally, a 1-minute shooting star forms near the 441. The next candle closes lower than the confirmation. The Algo buys the 0DTE slightly out of the money puts, a 440 put. Premium dips 20%. Stop loss triggered at 10:48. Trade closed, done for the day. Pseudocode. Naming both candles, hammer plus shooting star, are reflections of each other. One signals the reversal of a fear, the other signals the reversal of greed. It's simple, visual, and built for short-term momentum flips. All right, beautiful. I like this. So we have our strategy, ladies and gentlemen. So what I'm going to do is copy this strategy. So when we're ready, we can go to, hold on. Give me 1 second. I'm not using that. Beautiful. All right. This is beautiful. Beautiful, beautiful, beautiful. Beautiful. So we have our strategy. So now what I can do, let me just make sure it's Gucci, because you know how sometimes it be tripping. I just want to make sure I don't need to log in to Cloud Code, because I want to make sure that it's Gucci. So I had some problems with it earlier today, before we even start coding, because this is going to be the exciting part. I just want to make sure we are Gucci them. You know what I forgot to do? Is perfect. All right, beautiful. We're Gucci them. We're Gucci them. All right. We have our strategy. Let's go ahead and go over the cursor. What we're going to do, we're going to open a new project. We're going to go to our option baby folder. This is our option folder that we work on for all of our option strategy. We're going to create a new folder, and this is with inside cursor. We're going to call this twins or twinning. Twinning. Did I spell that? Twinning. All right, beautiful. Twinning. Now we're going to open our folder. So brand new environment. So I'm not using the cursor's AI, right? We're going to be using our Claude Code. So what I want to do is I need to open up a file real quick. Then I'm going to open up Claude Code. Now remember, we only use 4.5. So what I have to do, let me go grab 4.5. All right, grab the command. Get off my neck. I'm going to close this one out, clear, and then open up Claude 4.5. That's the one that we use when it comes to coding. So I'm going to delete this because I don't need that anymore. And now I'm going to get our strategy from ChatGPT. I'm going to paste it, within Claude Code. Then I'm going to say, review the following strategy we want to back test. Oh, should I build the, okay, before I even do that, now remember, I need to build context, because this is our first session that we're working within Claude Code. So in order to build context, what I'm going to say is, what do you know about option algo trading strategies? Beautiful. I just want to build context. Once we have that context, then we're going to continue with the work. All right, then it's going to let me know. All right, I have knowledge about options, algorithms, and trading strategies up to January 2025, the knowledge cutoff. Options are financial derivatives giving the right but not the obligation. That's crazy. To buy or sell an underlying asset at a strike price, including calls, puts, Greeks, deltas. We didn't go over deltas. Delta, gamma, theta. So delta is letting us know, okay, we're gonna go over this, but let's just keep going, and then I'll really go over the Greeks here so we can understand it. And I'm going to go over it as we're building out the strategy. We're not doing spreads, we're not doing straddles, we're not doing iron condors and various hedging strategies. These require a little bit more, right? And I'm not going to lie to you, I'm not even going to force to do it. Spreads limits our risk, but it also limits our rewards. Straddles really don't, but these require a little bit more, right? So I'm not going to do that with you all. We're just going to do calls and puts. And you're going to see how valuable it is here. Algorithmic trading is automated trading using predefined rules and mathematical models. Common approaches include market making, statistical arbitrage, momentum/trend following, mean reversion, high frequency trading, or machine learning based strategies. Trading strategies are directional, market neutral, volatility training, arbitrage, or quantitative strategies. So what I'm going to do, we already have a strategy that we created within ChatGPT, right? I was like, all right, bet. Thank you for this. Builds a foundation. Now review our strategy that we created. Let's discuss before we proceed with reviewing the data and the backtest reference file for this strategy. Now, what is a backtest? A backtest is when we take our strategy, we're going to drop it in a time machine, and I want to see how well it performs in 2024. Now, the reason I want to backtest it is this is the part of the training the strategy, right? The reason I want to backtest it is because this lets us know if the strategy does well in the past, there's a high likelihood that it's going to do well in the future, right? There's no guarantee, but there's a high likelihood. So that's why we're going to backtest our strategies. And in order for a strategy to graduate from backtesting school, it has to have a win rate of higher than 60%. The reason I'm not aiming for 50%, that's a coin flip. Who wants to do that? I can do that. Who wants to create an algo that's just making 50%? I mean, there's going to be an exceptions, but that's normally the rule, right? You have to be greater than 60% win rate. And you're going to understand this as we're building this out. All right. So let's go back to the recent output. So this is a solid intraday mean reversion strategy with clear risk defined management. Let me break this down for what I see. Clear entry and exit rules prevents emotional trading. Predefined risk, 20% stop loss, 12-minute max hold time. One trade per day prevents over trading. Position size management scales with the account, prevent ruin. 0 DTE, defined risk, no overnight exposure. Potential issues to discuss. Confirmation lag. Waiting for the second candle means you enter 1 to 2 minutes after the reversal point. With 0 DTE options, data decay can be brutal. Premium might already be moving against your ideal entry. TP levels, why the three? Because I'm going to skip that because this is. Shouldn't we just pick one optimal for this strategy, or do you mean whichever hits first? That's what I mean, bruh. So two. Okay. So one. What are the options for us to adjust such that we are not waiting or having a lagging signal because we are waiting for the second candle confirmation? Let's discuss. 2, yes, it is whichever hits first, so we want to keep it, bruh. 3, strike selection slightly out of the money is vague. How many? Okay. Oh yeah. Oh yes. 3, this will be addressed by the. Okay. We are going to be using a delta of 0.4 min, 0.1 max, 0.44, and for strike selection, let's discuss optimal way to choose the right one and not just the first one. 4, volume spread. QQQ 0 DTE can have wide spreads, especially for out of the money. Entry and exit slippage could eat into those profit targets. All right. Yes, do, bruh. All right. 4, yes, we do have the data. We will review once we address these points. 6, pattern reliability. Hammers and shooting stars on 1-minute charts can be very noisy. Have you validated this works on QQQ specifically over? No, bruh. That's what the backtest is for. This is what the backtest is for. Whoa. All right. And again, this is just a little bit more of the process to being able to build it out. And once we have the strategy, the entry, the exit, the close, and everything is in sync, then we could talk about having Cloud Code review the data. And once it reviews the data, then I'm going to have it review the reference backtest, and we're going to get to it. All right, let's see this output. Removing the second candle confirmation lag, options to reduce or eliminate single candle confirmation, single candle entry. Enter immediately when the hammer shooting star forms. Risk more false signals but faster entries. Filter idea, add a volume spike requirement. Volume over the last 10 candles. Intraday entry, real time spark. Don't wait for the candle to close. Enter when the pattern is forming. If the current 1 minute candle has a lower wick and is greater than the second body and plus a 30 seconds have passed, enter. Patterns could be invalidated before candle closes. Uses a 30-second candle instead of hybrid soft confirmation. Enter on pattern candle closes, but only if the next 15 minutes of the candle shows momentum continuation or RSI. Yeah, I'm going to do the volume plus require that the pattern candle to close in the direction of the reversal must be 40%. Okay. All right. One. All right. Hold on. Let's write this out. One, we are going to go with the immediate entry and plus volume filter greater than 0.48x of last 5 candles plus the the pattern, this part. Yep. But what I want to do is just drop this a bit so you can see. Let's do 20%. I'm going to do 20% instead of the 40 and see. This keeps you fast but filters out the weak pattern. Strike selection. Problem: the first available strike in the delta range is not always the optimal strike. Better score each strike. For each strike in your delta range of 0.1 to 0.44, calculate the signal strength based on the delta plus, and we talked about implied volatility. Liquidity is being able, so if we buy an option, right, we want to be able to sell it to somebody. And if we want to buy an option, we want somebody to be able to sell it to us. So liquidity basically means is that we can buy and sell without the risk of the option expiring worthless, right? So SPY is a very, very liquid asset. QQQ, very, very liquid asset, right? So, but each underlying option contract has its own liquidity. So we're looking at the delta, and the delta basically lets us know if the if the stock price moves $1 or loses $1, the delta lets us know how much the option contract is going to move. So let's use 0.1 as an example, right? So if the stock price moves up $1, then the option contract is going to move up $10. Why? Because there's 100 shares in every one option contract. We know that, right? And also delta also lets us know the probability of profit. So the 0.1 is letting us know that we have a 10% chance of this option contract of expiring in the money or at the money. All right, so where delta is the directional exposure, higher equals more responsive. IV is the implied volatility, higher equals more premium juice. That's pause. Liquidity factor equals open interest plus volume prevents illiquid strikes. Bid ask equals the ask minus the bid. Okay, over mid. Okay, penalizes wide spreads. Picks the strike with the highest score. Alternative is a simpler method. No question for you. Do you want to prioritize higher probability, closer to 44, or higher ROI, closer to 1? This would affect which end of the range you bias towards. What is this? This is 3. We want a balance but more favoring the higher risk reward. RR is risk reward. So we are able to ensure we get the most return for our risk we are putting out there. All right. So that's that. Confirmation. Unproposed. Okay. Now I'm just waiting for this. All right. I love that. I love that. All right. Let's lock it in. Hammer, lower wick is greater. Okay, perfect. Upper wick, close. We already have that for entry. And then shooting star. Updated strike selection. Lower, okay, for better RR. Okay. All right, score each strike bias towards the lower. I don't like that. I'm not gonna hold you. Skip if the spread is greater than 15, right? If the open interest is less than 50, RR score. This open interest thing is going to be interesting. Callback, fallback if no strike, and point. Okay, okay, expand to full range. All right, so what I want to do is let me have Jet review the data first. So let me pull in the QQQ data, and that QQQ data is where? That QQQ data is here. Nope. There it is. QQQ. A Parquet file is like a CSV, but for computers. It allows them to be able to read it a lot easier. All right, review the QQQ data we have, and then let's discuss before reviewing the backtest file. Make sure we have everything needed to backtest this strategy data wise. You know what I forgot to do? I forgot to bring in our Conda environment. A Conda environment is like a garage for all of the Python libraries that you're going to need for a backtest for whatever project you're working on. And this particular Conda environment has all the all the option specific Python libraries that we're going to need, like NumPy, like I was just watching something. Pandas, right? Like there's going to be a lot of it in there that allows us to be able to use it for what we're going to be doing here. Use the Conda environment to run the terminal commands to understand the data structure. All right, so it's going to activate the Conda environment. So what it's doing right now, it's activating the Conda environment, and it's figuring out what version of Python is there. Now let me examine the data structure of your Parquet files. And it's using Pandas. Remember, Pandas is like the Excel for option. It allows the computer to be able to understand the data structure, what kind of correlation is there, what is the data telling the AI, so we can be able to build this backtest efficiently, making sure we have all the data that we need in order to build said backtest. So all it's doing right now is using Pandas. Remember, Pandas is the Excel for Python in order to review and examine the data, and it's doing it within our Conda environment. So that's what it's what's going on right now. So it should be finishing up within, I want to say, the next minute or so, if that. So don't spaz on me, homie. There we go. So it's going through all the data. And again, it's a lot. I'm not going to hold you. We have data from 2022, 23, and 24. I do have 25, but mainly what I want them to see, they're looking at the Greeks. So we have a lot of data. And we get our data from Theta Data. I'm not sponsored by them, but hey, if you do want to sponsor me, what up, though? We get our option data from Theta Data. Hold on. So if you want to follow along there, let me just pull up Theta Data real quick so you can see them. So I'm waiting on this. We get our option data from Theta Data, And then I used to use Polygon, i.e. massive now, but it was Polygon, which is weird, whatever. But I don't like them as much. Reason being so is because the data from Theta data is a lot more granular, right? And they're giving us the historical Greeks, whereas Polygon or massive wasn't before. So that's why we switched over to Theta data. For our open, high, low, close, we get that from IBKR. If you open up an account with IBKR, they give you the historical data for free, right? No option data, but historical data, you can get that for free. And then I use Alpaca for real-time data. Again, open an account, you can get that for free. And what else? So that's it. So Theta data is really the only one that I pay for. And then Alpaca and IBKR are ones that you can get completely for free. But I recommend, I mean, Theta data, it is worth the price. You only need the standard. You don't need to go past the standard, right? The standard will give you everything that you need here in order to do what we're doing. And that's for options. You don't need stocks or indices, because I talked about how you can get it for stocks. You can just open up an account with a broker, right? Whether it's IBKR, we use IBKR, or Alpaca, or you can even use Tasty Trades, right? Whatever. Let me be a little more efficient. No shit, bro. This is a lot of data I just gave you, bro. What am I saying? Okay, for Theta data. So that's why you don't need, I think the standard is more than enough. I mean, you can get away with using massive or Polygon, right? But it's almost the same price for what you need. So I'd recommend, if you're going to do it, right, just go ahead and go over to Theta data. But nonetheless, all right, let's wait for this output. This output should be finishing up here. While it's finishing up, let's go get our reference file. I need a backtest, and preferably one for QQQ. Let me open this up. Let me just go to QQQ. Oh, this is our sniper one too, so I like this backtest. So let me bring it over. Let me see if the output is done. Nope, you're still reviewing. That's crazy, fam. All right, so let me go over this backtest real quick so y'all can understand it. So the libraries that we're using, again, remember I said I was using the Conda environment. The Conda environment has all these libraries that we're going to need, right? Pandas is the Excel for Python. NumPy is the calculator for Python. So these are the two main things that we're going to be using, right? So what it's doing right here, it's bringing in, bringing in the data for QQQ, and also bringing in the VXN. So the QQQ and the VXN. We don't need a Greeks path. This is the open, high, low, close path. Set that to none. Set that to none. This is the starting capital. All right, beautiful. So I told you full 2024 data. But wait, I have 24, 23, and 22, not just for pattern recognition, open, high, low, close. Okay, granular. Pattern detection on 1 minute data, filter by delta, immediate, no, exit, portfolio. Okay, the minute granularity. Greeks and quote minutes are in snapshots, not tick by tick. Premium changes between minutes and will be interpolated. 0DTE identification need to filter when the expiration equals the trade date to isolate the 0DTE options. The slippage you were buying at ask and selling. Okay. Yes, we have everything we need. Next step is to review the backtest code. All right, so let me bring that over. It just said something. I'm kind of like backtest reference example. That's a long ass name, but whatever. Boom. Here is the backtest reference example review, and then let's discuss how we can create for twin mirrors strategy we are developing here. All right. There's something I wanted to do. Now let me just wait. Perfect. Now let me understand the structure. Let me create a plan for adapting this for twin mirrors. All right, so while that's being done, what I'm going to do, I need to create folders so we can save our results, right? So what I'm going to do is say create a folder called backtest results. Within that folder, create subfolders called 2022, 2023, 2024. Within those folders, create subfolders called V1 back test. Perfect. All right. You know what I want to do is, hold on, I'm gonna come back and take that. All right, perfect. Let me just make sure our data structure. Perfect, V1. I said, bruh. I said baseline. Did I say backtest? Did I say backtest? I meant baseline. My fault. We meant V1 baseline, not V1 back test. Let's update. All right. So let's go here. Okay, discussion points. Do you want to keep the open interest filtering reference? Use it for liquidity. You have the open interest available recommendation. Keep it. 50 open interest. Should we remove the VXN? Reference uses the VXN of 533. Twin mirrors doesn't mention it. Remove it to simplify. Okay. Do you want the, hold on. Do we absolutely need the OI data for what we are doing? Open interest is OI. 2, yes, we can remove it, not using it here. Yes, keep all the verbose logging. 3, yeah. 4, yep, that is fine. Now advise before we proceed. All right, let me just double check. V1 baseline. All right, perfect. So we have that. I thank you, fam. You're going to come into play later. You know what I really wanted to see today is Sauce Gardner play, but I haven't really been doing that because we've been working on the strategy. But we're getting to our coding part, right? We're actually coding the strategy out with Claude Code. Now, this is going to be kind of almost vibe coding-ish in a sense. Okay. Do you absolutely need the OI data? You can backtest the twin mirrors without the OI data. Here's why. The OI data does, it filters in illiquid strikes, prevent picking strikes with no volume interest, improves realism, ensures you can actually fill the order in live trading. Alternative, use the bid-ask spread as your liquidity proxy instead. Instead of open interest is greater than 50, we can use the spread percentage, right? If spread is greater than 15, we skip. Why this works: widespread equals illiquid markets, same signal as low open interest. You already have the bid-ask in your Greek data, simpler code, one less data merge. Okay. Can analyze OA trends later, extra data. Let me start with I agree. I agree. All right. So we are going to skip OI for now. Now let's discuss if we are ready to begin coding this backtest file now. Oh, picked off. That was almost. We should be ready to go ahead and start backtesting. And remember what backtesting is. We're dropping our strategy in a time machine and seeing how well it performs in 2024, 23, and 22. there is a high likelihood, if no guarantee, there's no guarantees in trading, right? But there's a high likelihood if the strategy does well in the past, it will do well in the future. So that's what I am. Okay. Pre-flight checklist. Are we ready to code? Let me verify everything is logged in. QQQ, 0DTE, 932, pattern detection, hammer plus bullish. Okay. Hammer criteria, shooting star criteria, close position, volume filter. That's high as no. The volume filter is 0.48 JIT. Volume filter is 0.48x, not 1.48x. What else? Confirmation done. We enter immediately. Delta range, preferred delta range, liquidity filter, no OA check. Scoring, minimum okay to prevent penny options. Exit logic, whichever hits first, 20%. Exit if okay. Position, we have our data. Final questions for you. Should I create file location? One file location should be where we are at now. And the name of the file is twinbabybt.py. Also, the volume confirmation is 0.48, 0.48x, not 1.48x. We are starting here to be a bit more aggressive. What else? 2. Yes, we are starting with 2024 and then change to test other years. 3, print every candle update like a reference, or let's print let's print every candle update and entries and exits so we can properly debug if needed when we are discussing the results. 4, pattern edge case. What if the body size equals 0, a doji candle? Do we skip it? That's a great question. That is a great question. For now, let's skip, since that represents indecision. We can figure out what to do with that later, i.e. if it's a red or green doji, how we could treat it. But for now, oh, there you go. Let's skip. 5, tiebreaker. If multiple strikes have the same score, pick the closest to the yes, that is fine. All right, now we should be ready to start coding. Again, what was I going to say? So most of this coding is going to be kind of almost vibe coding ish, right? Where we're using AI in order to code our backtest. But again, we're okay. Volume filter, file location, twin baby BT, and then skip doji. Okay. Oh, what was I going to say? Most of this, it is going to be vibe coding-ish, right? What I mean by that, like, we are using AI in order to create our code, but I still want to be able to go over it with you all so we can understand, number one, what the hell is going on. Number two, whenever there's an issue, comments, concerns, or questions, we can go through the code and understand it. So yes, it is going to be vibe coding in a sense, quote unquote, but it also is going to be us being able to go through it and understand it. When we get to the optimization part, the optimization is basically meaning tuning the strategy such that it works for the minimum requirements that we have. Then you're going to be understanding what I mean by that. But all of our backtest pretty much looks the same. Oh, that's another point. We have to create a custom backtest, right? Reason being so is because we're using options, and with options, backtesting.py doesn't work. Backtrader doesn't work. Algo, yeah, Algo trade doesn't work. Frequent trade doesn't work. Vector.bt doesn't work. So I've tried many of the backtesting Python libraries, but they just don't work for option trading. So that's why we had to create our own backtesting library quote. I'm doing air quotes because it's not really a library, if you would, but it's a set. It's a way to be able to backtest it using what we picked out some things from backtesting.py. I picked out some things from Backtrader. I picked out some things out vector.bt, right, in order to make this a lot more efficient. So one day I'll go through it, the code, like step by step, so we can actually see how it works. But for right now, all the backtest code works the same. They're all created the same. So that's why I bring in that reference one. And when we're going through it, I'm talking about the optimization part, because that's the most important part that I think you all, I mean, the coding isn't that hard, right? Because as you can see, as long as you follow the steps as what I'm doing here, right? We went from ChatGPT. We had an idea for the strategy. Then we built out that strategy, right? Now we're backtesting said strategy. So this is a step-by-step meticulous process. And I really hope that you all are gaining that understanding. If you do have any questions at all, please let me know. Okay, let's go look at it real quick. All right. Remember, starting capital R starting at 100. Use dynamic risk scaling. Yes. Minimum balance to trade $10. 0DTE. Oh crap! What are you doing? 0DTE. Volume filter. We talked. So these are the rules for the algorithm, right? So these are the rules rules and instructions that we're setting forth. Okay, these are the rules, and here's the instructions. Right, so this code is the instruct. So calculate the dynamic risk percentage. So this is how, okay, if it's at 100, the balance is at 100, you can only use 84, right? So on and so forth. So this is to be able to calculate the account balance. Then we're loading the Greeks. Like now we're loading our open, high, low, close data. What a cash, Drake London. We're loading our open, high, low, close data, and then we're loading our detect twin mirror signal, right? We're talking the entry, the exit. And then we're loading, this is the algorithm, or this is the scoring metrics, right? In order when we're finding the strike price for a call or a put. This is for managing the position. When we actually open the position, right, we're going to manage it. So this is the twin mirrors position management. And you're going to see all this. I just want to review the code just to make sure there's nothing that is egregious here. Get the current price that we're getting that from the data. Get the close price, get the price entry. Run the backtest. So here's the actual backtest engine. Running the twin mirrors 0DTE backtest, starting capital, trades, trade volume, right? Version 1, full verbose. Verbose is logging. So we want to be able to get feedback of what's happening, why it's happening. It's going to let us know if the account is blown, stopping backtest, and why. An account blown if we're under $10, as you see, I saw from the top there. And then it's going to show us the results. All right, and then just to make sure what year we're running it on, it should be around here. I thought I just saw it. Okay, I see the days, but where's the year? Hold on, 2024. Okay. Oh, we're going to put it in from the year. Okay, perfect. I'm going to close that. And then, oh, so that's how we're going to run it. Okay, I wanted it like this anyway. Perfect. So we're going to say Python twin baby bt.py 2024. Py because it's Python, 2024 because that's the year we want to run it. What I want to do, let's come here real quick. Boom, while that's loading, we're going to say backtest v1 baseline 2024 new high. Perfect. I'm going to come back to the backtest and wait for this to load. So y'all just give a sec. If you do have any questions about where we are, what we're doing, and how this works, right, you can definitely drop a comment and I'll. All right, beautiful. Now we're just waiting for the backtest to load. Again, it's going to take maybe 2 to 3 minutes to load because it's loading 23 million pieces of data, right? You try to do something 23 million times and tell me how long that takes you. So we have to be a bit patient, right, with our strategy. Okay, let me get the parameters so I can parms, beautiful. Beautiful, beautiful, beautiful. All right, it's loading the Greeks, right? It's 23 million pieces of data, so you just got to be patient with it. And once it loads the data and goes through the back test, then we can actually say, okay, you know what, how is it performing? All of our back tests start with $100. Let me make sure you're Gucci. Yep, all of our back tests start with $100. So I'm really interested to see how this one is going to work. It took us about 90 minutes, I would say, to go from idea to fleshing out the idea to crafting our strategy to now actually back testing it. So about 90 minutes. So let's hope maybe in another 90 minutes or an hour or so, we'll be done. Strategy is done. Back test is beautiful. Created our bot and it's ready for paper testing tomorrow. Because tomorrow we have another bot that I just added, which is the penny for you. So I'm going to be adding, so that's our 8th bot. This is our 9th bot. So maybe I'll get the 10 before tomorrow. Who knows? Yeah, be patient. All right, the backtest should be loading. And again, it's loading the Greeks. It's loading the Greeks for the entire 2024 for QQQ. It takes a bit because it's loading 23 million pieces of data into our time machine so we can run it for 2024, right? Probably just filtered out maybe 100,000, maybe 50,000. Excuse me. So it's building so right now we're building our time machine, for lack of better words, right? So we're building our time machine. We're making sure to be able to turn the knobs. All right, we're getting to 2024. Okay, here we go. I can stop talking. Backtest is running. First trade we made $66. Second trade we made $10. Oh, first 4 trades are win, ladies and gentlemen. Okay, we're at 75%. Now we're at 60%. Okay, we may have found something. We may have found something, ladies and gentlemen. So now we're taking a step back. Okay, here we go. So I'm seeing mixed results, y'all. So I'm seeing, all right, we'll hit, but then we don't. All right, let's see what happens. We're at $28 right now. So let's see if the strategy can survive. We're at $28. We went from like 180, so we're at 28. It's at $18. It has $18 to trade. So January was kind of brutal. January was kind of brutal. So I want to go grab some water real quick while this is running, and let's see if I have $0. Oh, that's crazy, fam. This is what I want to do because we're not just going to. All right. Is it here? Is it here? Is it here? Do you have everything here? Yes, you do. Okay. Review. The log. And use grep and awk. Then let's discuss what happened so far. We stopped the back test due to running out of funds. Let's figure out what happened without introducing bias or overfitting. So we just gonna yeah, let's figure this out, homie. $12 stop losses. As you can see, I thought it was about to be trending upwards, but then like it fell on its face. This is part of the process. I'm not going to hold you. There's going to be things that when it works, but there's also going to be the first 20 trades. There's 20 trades that happened in January, but those 20 trades really it didn't work the way we needed to, so I gotta stop it, and then we gotta go back to the drawing board a bit. So that's what I'm doing, because I didn't just want to go through that entire thing and be like, all right, it ain't hitting the way I needed to. But what I'm going to do is just do this one optimization or one tuning, and then once we tune it, then I'm going to let it run for the full year. All right, what happened is the death spiral. We went from 100, we peaked at 180, and then we ended at $17. Win rate is too low, 30%. We lost. The strategy is triggering on patterns that immediately reversed against you and stop the bleeding. Okay. Issues: when you lose, you hit the 20% SLs hard. The average is $16. When you win, you only make $28. The risk reward is okay, but your hit rate is terrible. The pattern detection is too aggressive. 12 consecutive losses after trade 8. Most hit the stop loss within 1 to 7 minutes. The ROI range was -20 to -37. This means that your patterns are triggering too early or on false signals. What went wrong? No bias, just facts. The volume filter is too loose. You're requiring less volume than average. Means that the current volume needs to be 48% of the average. This catches low conviction, choppy prices, and false. No, I want to do it to 0.88. So, bruh. The wick ratio may be too strict. On 1 minute candles, this might only catch extreme wicks that already reversed too far. Don't and doesn't have follow through. Relax the wick ratio to 1.5 to catch more valid hammers. Close percentage filter might be too tight. I dropped, it was 40%, and you dropped it to 20. This requires the close to be in the top 20%. On choppy 1 minute, this might miss valid patterns. Relax it to 70. And then the pattern timing, no additional confirmations. You remove the second confirmation, which was supposed to reduce the lag, but you're now entering on single 1 minute patterns. No confirmation, no reversal. Enter immediately. Price moved against you. We hit the stop loss fast. Key observations is when the strategy worked, it was 5 out of 2, but when it failed, it was 1 out of 12. What changed? The pattern conditions, volatility, and the trend. The pattern, okay. All right, so this is what I'm going to do. We are going to increase the volume from 0.48x to 0.88x, 0.88x, and then what else do I want to do? And then go ahead and drop the wick ratio to 0.12 and drop the wick ratio to 1.2. Hold on, I just saw a pick. To 1.2, and then from 20, let's go to 40. And then from 20% to 40% for the okay. And then let's keep everything else the same. Jesse Bates called a pick. All right, so we're updating the volume filter, we're updating the wick ratio, and we're also updating the close percentage. All right, the volume ratio, the wick ratio, volume filter, wick ratio, and the close percentage. All right, let's run it again. And while it is loading, y'all, because you know it's going to take like 2 to 3 minutes, let me go grab some. Yo, de agua. I'm gonna go my ponti glow, okay? Venti USS pour moi. I'll be right back. All right, we got our back test running. So let's see how it performs now. Can it survive January? Can it survive January? I think once it survives January, the rest of the year is going to be great. Oh, it did survive. We're in February right now. What happened? The first few. Okay. Let's keep up where it's at. Let's keep up where it's at because there's a few things that noticing. Oh, now we have no money. That's wild, fam. Okay, so what I'm going to do, I'm not going to stop it. I'm just going to let this back test finish. And then once this back test finish, then we'll get to being able to go over what happened, what went right, what went wrong, and then fix it accordingly. So I'm going to let this back test finish and run. And then once it finished running, then we're going to go over it. Right now, we are waiting for the back test to finish. And as soon as this back test finish, we will review the results. I don't want to stop it because I need at least one baseline results, because before I stop the other one, now we're going to let this run, figure out what happened, what didn't work, what worked, and then adjust it accordingly. So we're waiting for the back test to run. Give it about another 2 minutes or so, and then once it run, we're going to jump right back in. All right, our back test just finished, and let's review the results. 32 trades. We finished at $15. Win rate was pedantic at 37%. The best trade was $20. Worst trade was 23. Profit factor is horrendous. Max drawdown is 84. So let's really look at this and find out what happened during this back test. So I want to do, all right, boom, drop that here. And I'm also going to provide the results. Review the results, and let's discuss what happened before we adjust the parameters. So I'm going to be reviewing the back test. I'm glad that it just finished. Now I want to gauge on what happened, how we can adjust for it, right? But I want to do this without overfitting or introducing bias. All right, so I'm waiting for the output, and as soon as we get the output, we're going to really dive into what happened here. All right, let's run that. And remember what Pandas is. Pandas is the Excel for Python, allows it to be able to review the data and find the correlation, find what story the data is telling us so we can proceed and adjust accordingly. All right, looks like we're about to get the output. So I'm interested to see what this output is going to be. It really is V2, but I'm going to consider this our baseline. Remember the folders that we created? All right, what I'm going to do is, you don't need that. Let's move these to 2024 V1 baseline. Move, do not copy. All right, the metrics V1, V2. All right, we had 37% win rate, so it went up a little bit. We had a little bit more trades. We had TP hits a little bit more, doubled, right? But the final balance was less. Relaxing the filters increased the signal count, but the win rate and the win rate slightly, but you're still losing money. The win rate is still too low for a 20% stop loss and a 28% TP strategy. A required win rate is 47%. Your win rate is 37.5. The exit tells us the story, stop loss, so 100%, and then time stops. 60% of the trades hit the stop loss immediately, death by 1,000 cuts. When you win, you make good money, but when you lose, you lose more often, so the net is negative. Call and put performance. Puts patterns are better with a 45% win rate versus 33. I mean, still not, still both unprofitable. Hypothesis is market was trending up in early 2024. So the hammer patterns is the false signal, choppy uptrend, and the shooting star is catching the pullback. The timing issue peaked at 40, trade 14 with 102.90. Trades 1 through 4, 6 winners, 8 losers, then a death by this. All right, what this tells us, the core issue is the pattern quality is still too low. Even with the relaxed filters, you're catching false hammers in a choppy market, execution candles that don't actually reverse, and 1 minute noise masquerading as patterns. The evidence is that 60% of trades hit the 20% stop loss. The average hold time is 3 minutes and only reach 25%. So deeper dive, why are patterns failing? Theory 1 is the market context matter. You're trading 0DTE reversals. And 2024 was a strong uptrend. In trending markets, reversal patterns are actually continuation setups in disguise. Your shooting star, your bearish, might just be bull. Oh, so do we need to flip it? If I see a shooting star, go get a bear. Wait, your shooting star bearish might just be a bull flag. Theory 2, no. I like this one. Volume may not be strong enough. What to text? All right, hold on. You mentioned that the shooting star might just be a bullish setup and not bearish. Review the data objectively and advise if we can do the following. A hammer buy puts, and when we see a shooting star, buy calls. Does that work? Will it? Review and advise and cite your source. Be right back. I just had an idea. I don't know if it would work, but let's see. Let's see. Yo, these creative commercials, I'm not going to hold you, have been snapping. I'm talking about the ones for like Claude Code, OpenAI, and even shit, the Apple one. I just seen one for Shopify. Whoever's behind it, y'all are doing a phenomenal job. Well, here it is. We moved it to here. It was looking for the data and it couldn't find it, so I just had to, oh, here it is. Let me point you in the right direction. Because we like organization over here, partner. We like to be organized. The contrarian hypothesis test. Oh, nice throw. All right, wait for the output. As soon as we get the output, then I'll have the basis of said strategy. All right. Well, you see this? You see this? You see this? Bruh. I have yet to see, this is my second time seeing Claude cuss. I'm not gonna hold you. I'm not gonna hold you. This is crazy. The inverse 25%. Why this work is the objective. The market context is a strong upward trend. Okay. Net move was 10% in 2 months. And upward trend, a hammer after a small drip is not a reversal. It is a bull flag, a continuation setup. Price dips, weak hands sell, strong buyers absorb. Next move, continue up. Your call loses, inverse put wins. Shooting star after a small rally, not a reversal. It's a pullback in an upward trend. Price spikes, profit taking a dip, dip gets bought. Continuation, next move continuation up, your put loses, the inverse call wins. 0 DTE. Patterns are exhaustion wicks for institutional sweeps, not true reversals, just liquidity hunts. After the wicks, price returns to the trend direction. Your strategy was seeing exhaustion, betting on the reversal. Reality, the exhaustion was a continuation in a trend direction. Evidence from the data is that the hammer was a put inverse. Win rate was 67%, 14 out of 21 trades. The average was 267. Why? After a hammer, a bullish wick, the traditional buy call expecting a bounce to continue fell 66% of the time. The inverse buy a put bounce, fade the bounce, wins 66.7% of the time. Interpretations, hammers are freakouts, bounces get sold. I'm sorry. Winning star, inverse, 54%, 261. Why? After a shooting star, a bearish wick, traditional buy put expecting the drop to continue fell 54% of the time, but the inverse by the call wins 54% of the time. Interpretation, shooting stars after a dip buying opportunity in the uptrend. All right, mean reversion versus momentum in intraday timeframes. This is the academic and trading sources supporting this. On sub-hourly timeframes, candle wick patterns do not predict reversals. Instead, they signal liquidity events that revert to the mean. Your case, the 1 minute hammer / stars equals liquidity wicks, not reversals. The trend following is greater than reversals. Source: 2 centuries of trend following, Hurst, OE, and Patterson. In trending markets, fading short reversals outperform betting on the continuation of the micro reversal. Your strategy was fading the micro reversals equal profitable. False breakout / stop the hunt theory. Source: the market micro research. Hammer wicks equals the stop hunt below the support by market makers. Price sweep stops return to the trend. Your inverse put is betting on the return to the trend equals correct. Flip the signals. Okay. Flip the signals, then rerun. Flip the signals and increase. Flip the signals and add a trend filter. Let's flip these signals and then we will rerun on 2024. This is interesting. We found something new. So in essence, whenever we see a hammer forming, we can go by the put, and whenever we see a shooting star forming, we can go by the call. So that bullish means that, okay, the bears may be lurking. Double check and make sure good and no issues before we run it. Which we should be Gucci. All right, so let me get that loaded. So we have to write over here. Hold on. So I have to write that V1 and V2 were not successful due to Strat not making it out of Jan. We flipped these signals. So hammers equals puts and stars equals calls, and waiting for results. V3, flip them. 2024 new high. All right, beautiful. Now let's go back over here. Perfect. Pre-flight check. Okay, we should be, the backtest should be okay. It's loading. So let's just make sure 60%, 60%. Bullish. Okay, it's ready to go. All right, it's ready to go. So let's check the performance. Well, Again, it takes about 2 to 3 minutes to load the data. It's loading 23 million pieces of data, right? 23 million rows of data. So it's going to take a bit. So y'all just be a little bit patient. And as soon as the data loads, I'm expecting great things from this performance here. Great, great, great things. Well, I thought you were going to crib it. All right, we're waiting for the back test to load. And as soon as it loads, we'll be able to go. All right, come on. It's not like we're waiting for you. Waiting for the back test to load. It's about almost there. Here we go. Okay. This was horrendous, bruh. All the trades are losing. All the trades are losing. All right. Review and let's discuss. Do not think we got this right. Maybe we have to go back to what was working and then figure out what is the issue here instead of flipping. I'm talking about every single trade was a loser. Every single trade was a loser, bruh. But were we up at any point? Nope. Nope. No. Okay. All right. Let's get ready to do this review. You're absolutely right. The stop loss and the assess. Let me analyze what just happened. The hammer inverse. Okay. Every trade loss. Why didn't the inverse work? The flaw in my analysis, I made a critical logical error in the simulation. So the inverse P&L, the original P&L flipped a sign. This assumed that the original call lost, the inverse put would win by the same amount, but that's not how it works. The reality, the inverse signal, you traded a different strike at a different time with different Greeks. The example from your data is that V1 hammer, okay, lost 23, put lost 15. Why? Different strikes, different delta, different entries, the same market conditions. These kill both direction. What actually happened? The real problem is the pattern timing is not the direction. Looking at the trades, all 9 trades hit the stop loss within 1 to 9 minutes. None hit TP or the time profit. The average hold time was 3 minutes before the stop loss. This means that the patterns are being triggered at bad entry points regardless of the direction. The volume filter is too weak. The issue 2 is the 1 minute patterns are too much noise. You enter that. Okay, 2 minutes. These aren't reversals or continuations. They're just noise, no market context. You're trading patterns in a vacuum. No trending filter. Is it an uptrend or downtrend? No volatility. Is VIX spiking? No time of day filter. What to do next is require 150% real conviction. Add a minimum candle filter. Skip if candle range. Okay. And then add I'm not adding a trend filter. Nope. Okay. All right. First, before we do this, advise quickly via TLDR, are we to flip the signals again? Also, we are game with the volume increase to 1.2x and adding the minimum range filter as well, and keep everything else the same. No trend filter for now. Okay, 1.2 add um okay, hold on. Let me ask. Right now the trend filter you're recommending is a 20 SMA. Can we use a faster SMA, 2 or 3 or 5 minutes? We do not want it to be as lagging, but there may be benefits to adding this trend filter. Advise via TLDR before proceeding. Because that's it. This 20 SMAs, meaning okay, I need 20 minutes of data in order to get the moving average. Is that the smooth moving average? Difference between SMA and EMA. Simple moving average and then the exponential moving average. 3 bars minimal, very restrictive, catches micro trends, lots of whipsaws. 5 bar balance, recommended, filters the noise, catches the trend. 10 bars stable, good for trend confirmation. 20 bar very stable, too slow for 0 DTE 1 minute trading. My recommendation, start with the 5 bar SMA. Simple moving average, 5 bars the last 5 minutes, matches your volume look back, filters out to the 1 to 2 minute noise, and catches the real intraday moves. No lagging 20 bar. If the price is greater than the 5 bar SMA, upward trend, only call signals. If the price is less than the 5 bar SMA, downward trend, only put signals. Test. Add a 5 bar SMA filter now with the volume plus range fixes. Pro, might boost the win rate significantly. Con, more validations to test. Skip the trend filter for now. Test the your call. All right. Let's skip for now and test the volume and range and signal fixes first before we proceed. Let me test them, homie, and see how it works before we proceed. That's supposed to be crib sauce. That's supposed to be crib. All right, make sure we're Gucci. Let me go get the command. Now I have the command. Let's go back. Oh, snap, crackle, and pop. Nope, I need you to come back here. Bro, just follow me, bro. Follow me, bro. All right, we're going to clear. Get that ready. Are we ready to run? We're ready to run. I can delete you. All right, let me let that load. Our back test is loading. We're almost there. Like another 2 moments here. Okay, there we go. Another 2 seconds. That was just little pissed me off, but whatever. Another 2 seconds. We're going to be having this back test run, and I'm interested to see what are changes that we've done and how is that going to impact it. So let's see. Let's see. And again, there's a few things that I'm not going to hold you that I'm still very much a novice on. But I really do appreciate you all going through this process with me so you can see how I go through it, right? And how I'm able to flesh out the idea. All right, let me shut up. Backtest is running. What is this? Covered, bashful, fiddlehead, tiny. We made this too restrictive. Okay, first trade came in. We lost $18. Let's take a look at the trade. This was a call for a 12 call. We had a 13% chance of being able to win. We bought 4 contracts at $17, and then the position turned against us. So let's see. I'm checking to be able to see how our strategy does. I mean, it got out of February. We only had 1 trade, but this trade turned against us. I'm waiting to gauge how well it's going to perform. Excuse me. So the back test is running. It hasn't found any signals yet, but as soon as it finds a signal, then it's going to trade. We only found 1 signal, but that trade didn't end up working for us, and it just didn't pan out the way I thought it was going to go. So now the back test is running. It is in about to finish up February. So I think we had no trades in February. All right, we're going into March, so let's see how it's going to play in March. We may have made this a bit too restrictive. Reverted. We want more volume above the average. New filter to skip the noise. The wick unchanged. Close unchanged. TP unchanged. Okay. Oh, here we go. As soon as I flip over. So we caught 2 trades, 1 win, 1 loss. Why did the winner work? Because all right, turn negative, then it turned for us, but this one was just a stop loss immediately. This was a call. This was a call as well. So one worked, one didn't. So let's keep letting the strategy work out. Let's see how it pans out for us. So we're going to let the back test run. If I see anything interesting, I will point that out. But I'm going to let it run and give it about another. Okay, here's another trade. So this is a first put that I've seen. 436 had a 16% chance. For puts, you're going to see that negative, but it's the same metrics. 16% chance of winning. We bought it for $36. And then we exited after 11 minutes and we were able to make 33%. So we're at $87 right now. How many contracts did we buy? Just 1 because it was $36. What's the balance right now? We have $87. Okay. Okay, got another one. This was a put, 431, 15% chance. Held it for 4 minutes, made 35%. So we may have something, ladies and gentlemen. So I'm going to let the strategy run. We have a few more. We're in May right now, and we are at $100. So right now, technically, we made 29 cents for said strategy, but you saw how we had to fight back a little. So let's see how well the strategy performs for the rest of the year. I'm just going to sit back and let it work. If I see anything interesting, I'll point it out to you all. If a trade pops up, I'll point it out to you all. But right now, we're just going to let our back test run. Okay, here we go. As soon as I say I'm going to let it run, I think that's just a trigger word. A put, 448, 15%. We bought 2 contracts at $29, and then we're able to make 44%. We held it for 5 minutes. All right, that's not bad. That's not bad at all. And then it shot up, then we got out. And we're able to take, what is that, $58, and then make 24. That's not bad. All right, so let's let this run. And I'm going to allow this backstretch to go. And if there's, I was trying to see if it's going to trigger a trade, but it didn't. If there's anything else that I noticed, we're going to talk about it. So let's let this backtest just run for a bit. Now we're in July. And I've seen 2 trades in June. So we're in July right now, and we're going to let the backtest run. So let's see the performance. My inkling is I think it's going to pick up for the rest of the year, but let's see. I step away from this view, and the strategy is above $200. Is above 258. I mean, we're seeing great things. I just want to like wait for the end so we can actually find out what's working and what's not. So I'm gonna let the strategy run. Like another 5 minutes or so, we'll be done. 2 minutes. All right, backtest just wrapped up. So let's look at it. $23 trades. Let me just highlight this real quick. 23 trades, win rate of 52%. Best trade was 75. Worst trade was 73. Profit factor is a little bit more respectable. Sharp ratios, still kind of horrendous. We peaked at 162, but we finished at 166. So there's still a couple of things that we need to adjust. Review and let's discuss. All right, so let's check the output. It's profitable, but like barely, bro, barely. So let's look at the output and see how well we perform. I mean, yes, if you want to look at it on its face, it is profitable, but there's a couple of things that we can adjust. Excuse me. That we can adjust to be able to improve the levels a little bit more. So let's look at the full analysis. Waiting for this output. So we have a few things that's about to happen. The compact. Profitability achieved. The final balance. Win rate was above the break-even threshold. Profit factor. Profitable system. All right. Quality over quantity. Okay, plus range filter was way better. Pattern quality. One trade, huge winner. Excellent, consistent. Puts are 198. Calls are okay. The put signals are amazing, 77% win rate, but the call signals are absolute failure. The puts contributed all the profits, and the calls are losing money. Why 2024 was volatile with sharp drops, perfect for put reversals. Upward moves was a grinder. Calls got stopped out more. The shooting stars, the put signals, patterns, and the hammer is greater than the pattern. The hammer for 2024. The stop loss is brutal. When you lose hard. Yeah, I figured. All right. Next step is to know puts work, likely catching the downward trend. Is it fighting the trend? Only take calls when the price is okay. Tighten this stop loss. Top loss is already at after profit. No, I'm not doing that. Filter art calls entirely. Nope. Increase position sizing when winning. After 200, shift to 50% risk instead of staying at 84. No. Before we do that, we want to know what we can do to increase the trades, but maintaining the performance. Advise on the parms to adjust. All right. How to increase trade frequency without killing performance. 23 trades in 340 days is going to have 2.6 trades a month. Most restrictive volume must be 120% of the average 5 bar. This filters out 70% of potential patterns to only catch strong conviction. My recommendation: compromise between quality may hurt. Minimum range: skip candles within 15% of QQQ. At 450, minimum range is 675. Filters out small choppy candles. Yeah, I'm gonna do 0.10 close. Okay. All right. This is what I'm gonna do. We are going to go with volume of 0.98. And then what else? And then minimum range filter of 0.12. Okay, minimum filter of 0.12. And then the close position 50%. Minimum. Shit, I just forgot. Minimum range filter and then close position threshold. So minimum range filter to 0.12 and then shit. Close position threshold 50%. Close position threshold to 50%. All right. This is what I'm going to do. V2 range filter and higher volume. Move these to 2024 and create the V2 folder. New settings, trades, win rate. Oh, okay. So we're going to do Python twin baby bt.py 2024. All right, so I'm going to let that run, and then once it's up and running, I'll come back for the commentary. All right, we're loading up our back test and waiting to see if our back test is going to run. Waiting to have our back test run, not if it is going to run. And then we're going to continue on with the work that we've been doing with building out this strategy. All right, waiting to see if it run like another moment or so. It should be running the back test. All right, here we go. Loading up our back test, and our back test is running. So let's see what we just did here is we made the parameters a little bit more aggressive. Looks like we're 11 days in, still haven't seen any movement. All right, I'm gonna wait and see. Okay, first movement, we had a put, the same put. We're getting in and the positions are reversing against us, fam. So I'm just gonna wait. Let's see how it pans out for this particular strategy. If anything of interest comes up while the backtest is running, I'll make mention of it. But again, this is going to be silent for a few while I'm letting the backtest run. So we're seeing some progress with our back test. Just got another trade, and that trade didn't work out too well for us. But again, I'm going to let this back test cycle through, and then once it's at the end, or if I see something a little bit more interesting, then I'll bring it to y'all's attention. But for right now, another trade just popped in. Two more trades just popped in, and again, I don't know if the strategy is going to pan out, but let's see. And if I get to a point if the strategy doesn't work, I'm just going to scrap it and then go on to something else. So let's see how it works out. All right, my fault. I had to step out to go. Never mind. You don't care. Whatever. All right. So it peaked at 173, finished at 104. Bro, I'm not liking this. I'm not liking this. I was thinking of another strategy while I had to step away real quick. And I have another strategy that I'm going to bring to you all, and I think when it work, review and let's discuss. Because I'm not going to quit. I have another strategy while this is working. All right. We want to create an option algo strategy with SMA 5 plus volume greater than 0.88. 0.88 times the average across the last 5 bars. This is going to be for QQQ. Let's proceed to build it out. Let's go back here. All right, 45 trades, 49%. Okay. Observation. All right. Let's go back to V3 parms and think about this some more so we can get this to the level we are good with. Oh, let's go. Jonathan Taylor just scored again. All right, so while that's doing this, let's go back here. Nice. Let's build it out and give you a clear production ready strategy plus 2 implementation paths that you can follow. Trading. Oh, no, backtest. I'm going to backtest. QQQ, SMA, volume, post strategy. Okay. Execution. Strategy, QQQ options, underlying 1 minute bar time frame, signal, long bias analysis, buy calls when the price is above on a 1 minute. Buy short dated. Okay, hold on. All right. Let's start with the entry. We want it for calls and puts. Do the inverse if that works. Before we proceed, this will be back tested via Python. All right. So for calls, if the close is greater than the SMA 5, we're going to buy a call. Close is greater than the SMA 5 and the volume is 0.88 times the average on a 5-bar look back. We're going to buy a call. This means that the price is breaking upward with above average activity. For puts, we go long on puts when the close is less than the SMA 5 and the volume is 0.88 times the average. This means that the price is breaking down below. Will mirror the same logic. Okay, already have the pull the QQQ 1 minute. Already have that. Okay. Lay out this strategy so we can properly review it. We'll call it second chance strategy. Here is more. What I'm going to do, I want to drop this to 58, 38, keep my 28. Let's put this to 25 and then keep 85, 50, 1 trade per day, 33, 44. All right, beautiful. Yeah, those still held true. All right, so I'm going to be working on two strategies at the same time because again, we are going to have a strategy. I'm not going to hold you. 23 chase, 52% win rate, 66% return, strong volume filter. Let me test it on 2023. Let me run this on 23 and let's see the results. Move to 2024, create V3, loose filter. So I'm going to run this on 23. So Python twin baby bt.py 2023. So let's review the results. All right, and then let's go back to what we're doing and creating our second chance strategy. The second chance strategy is an intraday dual option strategy trading algorithm that trades QQQ based on the simple moving average, momentum, and volume confirmation. It seeks to capitalize on early trend bursts after the market opened using the type stop loss control and then short hold times and adaptive portfolio allocation. QQQ, SMA, short, exit logic. Then we have the whole time portfolio management. Example 1947 QQQ is above the SMA 5 and volume is 1.2. The average of the 5-minute look back. Call premium is 20. The entry allocation 85 is less than the 495. Buy 4 contracts at 20 equals $80. The exit hits 58%, sell to. Okay. Sell all contracts. The only thing is we are exiting all contracts, not some. All right, so what I'm going to do is I'm going to take this. All right, second chance strategy. Then we're going to go back to cursor. It's still loading 2023. We're going to open a new window. And I'm going to open a project. Then I'm going to create a new folder, call it second chance. And then open that up. And then same thing. Oh, do y'all want to try something different? Do y'all want to try it with do y'all want to try it with cursors? All right, let's try it with cursors and then I'm kind of hesitant. Okay, let me try it with cursors and then we will compare the two. No, matter of fact, I'm just going to use Claude Code. I'm not, because I know Claude Code. So then open up Claude Code, close that. We can delete it. Let's go get 4.5. We can close this, get 4.5, open that up. All right, same thing. We're just going to build. What do you know about option trading strategies? Specifically for Algo traders. Explain and cite your sources in response. All right, let's go look at our backtest and see how that's performing. So backtest is going. It's in January right now. It's at $53. From what I can see, the last trade was a put, 268. We bought one contract, and then this was a stop loss. Was it ever profitable? Yes. Okay. So we're going to let this backtest run. All right, beautiful. I can provide knowledge about algorithmic option trading strategies based on my training, and the cutoff date is January 2025. But I should clarify, but I don't have access to real-time data sources to cite, and my knowledge comes from my training rather than live research. Volatility, arbitrage, market making, statistical arbitrage. One day I'm going to do it just with Claude Code, but right now I already have a strategy. Oh, let me just make sure. Okay. Review the following strategy that we have. Let's discuss. Only thing is that we are not scaling out of positions. It is a all or nothing. All right, beautiful. Yeah, I'm just probably going to scrap this one, but let's let it run. Let that run. And I'm interested to see how this strategy here is going to play out. So if you all have any questions on what I'm doing, let me know. Just to give you a brief synopsis, I am running, we're going to be creating two strategies at one. So the first strategy is the one that we went through to being able to create. And this one that I'm creating now is a simple moving average plus volume confirmation strategy, because I want to test something to see if, okay, if we get, the more complex we get, the strategy probably isn't going to. All right, beautiful. You state, all right, strategy is a second chance strategy, clear. Risk management, 25%, stop loss, well defined, time bound, exposure, 12-minute max hold time, volume confirmation, reduce false breakouts for low liquidity, wigs consistent, constraint time window, 9:33 to 11:44. All right, progressive position sizing accounts for the compounding risk as the account grows. Critical information questions, you state it's all or nothing, not scale out. This is contradictory. What is it? A single TP or keep all, first one hits win. So one, yes, we are keeping all, and first one that hits win. So if it is TP3, for example, we exit the full position. Two, option selection, this is critical. So we want the min delta to be 0.15 and max delta to be 0.40. We talked about delta, so y'all know Greeks, and we want to create a weighted scoring system to select the best strike price based on what we have available, and not just select the first one. Provide a elegant yet non-complex way we can do this. 3, signal entry weakness. Close EMA on one is extremely noisy. Equals a 5-minute lag on 1 minute time frame. You get 20 plus whipsaws per session. The volume filter may help, but it's not efficient. Add a momentum filter so the close EMA, okay, over the SMA 5 at threshold 0.05. Require 2 consecutive bar confirmations, or use RSI or MACD. That's kind of tough. With the 9:33 and 11:44 window, 131 minutes, only taking the first signal means that you enter at 9:34, you stop at 25%, you're done for today. No opportunity for recovery. Nope. Position sizing math. Also, broker options. Account cannot. Yes, it can, bro. Get the fuck out my face. All right. Will consider your momentum filter, but again, it has to be as aggressive as what we are doing. We are sticking to 1 trade a day. 5, we are sticking to what we have. 6, we have a reference file for you to review for this information. 7, we have the data. Once we flush out the parms for strategy, we'll We'll let you review it. All right, here you go. And let's go to our back test. Our back test is at $38 right now, and it is making its way through September. That's interesting. Well, this is turning to a good football game. 1 minute, under 2 minutes to go. The Falcons just scored. It is 23-22. It looks like they're about to go for two to make it a 3-point game. So let's see how that works. TP structure confirmed. This creates a tiered probability ladder. Higher higher percentage equals lower probability. Exit faster if it hits. The strike delta weighted system. Here's an elegant approach for the our delta. A weighted scoring system for the strike selection. The Delx proximity from point 3 is the sweet spot. Liquidity equals open interest plus volume. Bruh. Bid-ask spread tightness. Okay. Why this works. Reduces liquidity proximity, ensures that you can exit without slippage. Tight spread reduce the entry cost. Alternative, if it's the simpler version, if you want less complex, select, and they got it. And it's a 3-point game, 25-22 with under 2 minutes to go, and the Colts are about to get the ball back. So let's see how it works out. Alternative, simpler if you want less complexity. Select the best strike price option, minimum delta. Okay, choose the which approach. I want to mix between the option one. Okay, so freak. Hold on, let me go. That's question 2. We want a more simple yet as complex, yet elegant scoring system for this. We do not want to add OI, open interest, for this as of yet. Now, rethink and advise. 3. All right, keep it aggressive while reducing the noise. Confirm the momentum burst without waiting too long. Require 0.08 move of the SMA in the direction of the trade. So close equals data file. Locate the index for the close, and then the SMA 5 equals the data file. Locate in the index the SMA 5. Momentum percentage equals the close minus the SMA 5 over the SMA 5. For calls, we need 0.08. For puts, we need okay. This adds minimum lags, just a clear current direction of the SMA while filtering out weak noise. The threshold of 0.08 on QQQ is 0.35 cents of a move, which happens 60 to 80 times a day. Still very aggressive. Confirmed or confirmed. All right. We are good with this. Is there anything else? All right. So we just need to work out the, what do we need to work out? We need to work out the scoring system, and we're good with the SMA. Bro, this was tragic. Let's put our attention here. A simplified strike, elegant and clean, simple weighted system, delta and proximity. Okay. All right, I'm fine with that. I'm good with this. How about y'all? Yeah, I'm good with this. We are good with version 1. Here is the QQQ data. Let's go grab that. QQQ. The data is here. Data, QQQ, Parquet files. Okay. Review data within the Conda environment. Did he just pick the ball off? Oh, you dropped it. Ah, you booty. Then advise findings. What else would? Oh, I needed the reference file. Let's go grab a reference back test. Who trades QQQ? Who trades QQQ? Momo. Let's go grab Momo. Momo back test. Here we go. Ref back test. And remember what Pandas is. Pandas, excuse me, Pandas is the Excel for Python. So it allows the AI to be able to go through the data, understand what it is, and then being able to output it. And then we have our reference back test here. Them boys just quadruple sacked them. Yeah, boy. Yeah, boy. I think we can finish this in under maybe 20 minutes. Let's see. So I'm waiting on Claude to be able to finish its output for the strategy. I'm not even going to go back to the first one. Hold on. Here is the reference back test. Now advise how we can create for the strategy we are working on here. They went from 3rd and 21 to like 4th and 2. Daniel Jones just had a big third down run for almost 20 yards. I just want to call it 15 yards. Listen, this strategy is not working the way we intended. Should we just go to a put only? Should we adjust the parms? What aren't we seeing here to allow for strategy to work the way we intend it to? Review and provide an insightful yet not braggadocious answer / response, and cite as much as possible your rationale in response. All right, so it should have should be done with the Greek data. Oh, y'all in field goal range. So y'all gonna try and go to the knockout. All right, so we are reviewing our first strategy, our hammer and shooting star strategy, and figure out what's not working there. And then we're going to be creating another strategy using the SMA, simple moving average SMA 5. So it's looking at the simple moving average of the last 5 minutes, and then a volume confirmation. So what Cloud Code is doing right now is going through the data so it can understand it and make sure that we have what we need. Then once confirmed we have what we need, we can proceed with being able to have it review our reference backtest. Then once it has the reference backtest in mind, then we can create said backtest. So we're almost there. It is a marathon, not a sprint with these things. And I can assure you that we are going to we're going to have great work, y'all. $98,000. Okay, check all years. Let's go back here. Abandon the strategy. I really agree. The V3 results I cited were wrong. His were actually happened. 32 trades, not 23. 37% win rate, not 52. 84, both directions. Okay. The actual V3 performance. Oh, man. So what I want to do, let's force quit you. And then we should be Gucci. What are you doing that's causing so much issue, bro? Oh, it's loading all that data into memory. But it should be done. It should be done doing that. All right, give me a second. So as you can see, we're running into a bit of issues here. All right, there you go. It got drastically better. Went from damn near 16%, 16 gigs to like 6 gigs because it loaded all that data into memory. So once it loaded all that data into memory, computer's like, yo, what's going on? You're already using a lot. 25. Oh man, do I have to? Okay, I have to force quit it anyway. Can I just? Nope. Let me just force quit it real quick. Let me just force quit. I'm gonna have to restart real quick. So hold on, y'all. So we have to restart. Open back up cursor. All right. We're going to come here. Reference. Go here. Boom. All right. So that wasn't that bad. Remember, we got to get 4.5. So hold on. All right. So hold on. Now we're in 4.5. Let's go grab our previous session. Here's our previous session. Signal detection, sample. Okay, put this is realistic. Not every day will trigger. The momentum filter is working as intended. All 0DTE. All right, beautiful. Here is the reference backtest review, and let's discuss now how we can create for the second chance bt.py. All right, so it has the backtest reference file. Let me come here. Let me open up this baby. And again, I just want to review the previous results. Remember, we were running to figure out, all right, we're here. Option A, abandon the strategy. The 34. Okay, hold on. No. Review and then assess which we could proceed with. Ah. Okay, excellent reference. This is a momentum strategy using the VXN and the rolling high and low breakouts. Here is how we adapt for second chance. Okay, SMA, beautiful. Weighted system. 25, 12. No, we remove this. We're gonna keep. Okay, perfect. Perfect, perfect. Want me to copy with these modifications? All right, let's proceed to develop this backtest. All right, so we have that backtest running. And I think what I'm going to do here, the strategy fundamentally does not work for 0DTE. The candlestick reversal patterns need times to develop, hours, not minutes, second confirmation, and the trend context only counters trends in the market. 0DTE requires fast directional momentum, clear breakout confirmations, volume confirmation, quick exits. These requirements conflict. You're trying to catch a 30-minute reversal with instruments that decay in 5 minutes. Test a momentum breakout strategy instead when the price. Okay. All right. So that's not going to work. That's fine. Again, there's going to be things that are going to hit. There's going to be things that are not. Right. So this is just part of the process. I'm not going to hold you. But what I am appreciative of is like, all right, let's just quickly pivot. So we just had to pivot a bit to a strategy that will work out for us. I believe so. Right. This is a simple strategy where we're using the SMA 5. So simple moving average for the past 5 minutes. And then there's going to be volume plus momentum. Right. So we're looking for these three things to enter. Almost the same take profit. There's no VXN. Right. So the strategy should work. So let's see. Let's see what happens. All right. Puts have a massive edge. More trades failed. Path forward. Puts only strategy. Version 2 and version 3. Consistent edge across parameters. Calls are negative 131 to negative 55. Drag in every version. If V2 had puts only. Okay. Run puts only strategy for V2. If puts only sustains 70%, trade puts only in production. Study why the shooting star works in market structure, time of day, and then potential. Okay. Hold on. We ran strategy in 2023. Review and advise if puts only still holds true before we update backtest with this. All right. Oh, you know what I should have did? I should have opened up the window. So we have our second chance strategy. So that's ready to go. All right, beautiful. Beautiful, 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 beautiful. So our second chance strategy is ready to go. Python, boom, 2024. But you know what I forgot to do? Create a folder called backtest results. Hold on, just make sure I'm not tripping. Backtest results. Then within those folders, create subfolders called 2022, 2023, and 2024. And within those folders, create subfolders called V1 baseline. All right, so we're running our back test, our new one on for our second chance strategy on 2024. All right, beautiful. You're amazing. Thank you for listening. We can delete that one. We can close you. All right, beautiful. Again, I'm doing two things at once right now, but these both of them run in parallel in what we're doing. So I'm checking 2023 and seeing if this twin mirror strategy can be only puts and seeing if that works. And then we're running a back test on a simple moving average strategy with volume and momentum confirmation. So this is going to be our second chance strategy, for lack of better words, to see if we can salvage this session and being able to create a strategy that works for us, fam. Critical finding 23 and 24 puts 50% difference, put win rate. Okay, PNL. Puts edge is not consistent. Puts failed in 23. Okay, put success was a year specific, not the strategy edge. Failed in both years. Okay. Both years overall, low consistency. Honest opinion, the twin mirror strategy is not a robust edge. 2024 had a lucky few puts. Okay, abandon the strategy. I agree. All right, so we're running our new SMA strategy on 2023. And then let me see. Let's gauge how the performance goes. So right now we're at 151. We are in January. Damn. I just seen 3 straight losses. So let's see. Goodness gracious. Let's see how well this strategy can survive and perform. We're up 20%, but okay. All right, the strategy is performing. It's at $92 right now. We are in March, so I'm just waiting to see how well the strategy performs, and we're going to abandon the second mirror strategy. I'm going to go do some more work on my end, not with you all, but I want to get a strategy that works. I want to do some more work to figure out why it didn't work, and then once I figure out why it didn't work, I'll share it with y'all so we can still learn from it, right? Yeah, I'm going to scrap it, but I still want to learn from it as to like why it didn't work. Okay, just keep it in mind, you know? That's what I'm saying. This strategy, look, we were up 20%. Maybe I just need to drop it. It peaked at 25, fam. All right. So we just crossed $200. We're practically at the end of March right now. Now let's see how $300, $400. First $100 trade. First $100 profit. We made this in under 1 minute. It was a call. We bought 4 contracts at 57 apiece. And we made 70% in less than 1 minute. That's what's up. Let's see what those strategies at $800 right now. My fault. I wasn't even looking. Strategies at $826. Strategies at 1,000. Just crossed 1,000. When is it? It's April. We just crossed $1,000. I am glad I abandoned that other one, and I had the foresight to be able to say, okay, you know what? Let's come and just create another strategy and to see if we can get this to work. And again, I'm going to go back. We're going to go back and figure out why the twin mirrors one didn't work and why this one is flying. It is going. And again, all of our strategies start at $100. This little simple SMA strategy is flying off the roof. Simple SMA strategy is flying right now. It's at $2,700, y'all. It's at 26. So it's oscillating right now between 22 and 2,700. We just made it $200. Strategy just crossed 3,000. So I am not going to hold you. This is almost a good thing. Strategy just crossed 4,200. Y'all saw us go from a strategy that was shite, bruh, to one that is actually working and it's actually producing results. So you can see this is two sides of the same coin. And the reason I'm saying that, on one side of the coin, we're going to have a strategy that is completely flawed on its face. And on the other side of the coin, we have a strategy that can work extremely well with the same asset. Right. So this is not to say that every strategy that we create isn't going to be a home run. But what we have to do is just know that, okay, just because one doesn't work doesn't mean that the asset itself is bad. It's just a strategy with shit, bro. We just need to throw that strategy. Well, if we're going to cross 5,000, we're at 5,200, y'all. We're at 5,300. Yeah, y'all are getting great work, and I'm glad that y'all have made it up until this point. I know this is 3 hours long, but this is great information that you're getting here from start to finish. How we created this, right? Because I feel like this is a collective effort. So strategies at 5,600. We are in August right now. Is the strategy going to cross 6,000? Okay, it's oscillating right now between. Let's just cross 6,000. Can strategy make it at 10? Can the strategy make it to 10,000? Over or under? I'm gonna take over. I'm gonna take the over. Oh, what a catch! What a catch! Strategy just crossed 8,000. When did we get to 8,000? I just blinked. You know what? Let me just keep going. I told y'all. Did I tell y'all over, right? Okay, remember that. We are in September right now, and we're at 8,700. So I told y'all over. Remember, I told y'all over. It's at 9,100, 9,600, 10,000. I'm just 11,000. I'm just gonna just sit back and just. I've learned. Wow. I just made $1,000 in one trade. I used to talk so much trash about SMA. Oh my goodness, I used to talk so much trash about SMA. But I think I learned a little bit. Strategy just hit five consecutive $1,000 trades, and we're at 20,000. This is beyond my wildest dreams. This is crazy. Well, it's not to say I have seen a back test before go from $100 to 140, like 177,000. If you go check out our other stream, our other videos, you can see that strategies at 33,000, 2,000. So this isn't an anomaly for me, but what I have learned is how to properly pair an SMA, how to properly pair the. I'm going to try an EMA next, but right now we're going to keep this. Should I do that? Okay. I have an idea. And this is going to be completely stupid. It's at 60,000. Strategies at 60,000, fam. I have a completely stupid idea. Y'all want to hear me out? Review, and we want to change the estimate to EMA 5. What would be the impact? Let's discuss. Excellent. Switching from the estimate, the strategy is at $84,000, and again, it started at $100. What's the win? Okay, hold on. Let me come back here. 66% win rate. 239 trades, 86,000, $29.76. We made 85,000% return. The sharp ratio is 47. That could be better. The annualized return is 1,400. Max drawdown was 64. This could be a lot better. The profit factor is 393. That's not bad. The best trade was $6,000. The worst trade was $3,000. The average hold time. Oh, they won. Oh, that's what's up. The average hold time was 6 minutes, and the average rate of return was 115%. All right, let's take a look at our back test, bro. Review and let's discuss results. While that's going through the results, I still want to test out this idea. All right, switching from an SMA 5 to an EMA 5 is small but strategically change, and it will absolutely affect how your second chance strategy behaves, particularly since this is a short hold intraday momentum reactive strategy. Let me break it down precisely. Quick refresher, a SMA is a simple moving average for the last 5 closes, slower to react to new prices, higher, more smoother, more stable. The EMA is a weighted average emphasizing the recent closes, faster reaction to momentum shifts, less lag, more responsive, but can whipsaw. Impact with an EMA 5 entries, both calls and puts will trigger earlier in the new short term trends. Since your entry logic is the close, EMA 5, and then the put. Okay, puts is the close is less than the EMA 5. EMA has is being more reactive means that the call entries will fire sooner after the upward momentum, and then put entries will fire sooner after downward momentum. Pros, you'll catch the start of the move earlier, improving the R&R. Cons, slightly higher risk for false starts, noise trigger, and especially around the consolidation low volume. Your volume consideration acts as a momentum filter. So combining it with the EMA 5 actually balances out some of the false filters. The exit. Okay, so just give me the. So, yes, switch to an EMA 5. It aligns with your strategy's identity intraday. Okay, just note in your backtest, you will likely see more signals, but higher P&L dispersion, and you can. Okay. Oh, let's go back to the actual backtest that we're working on. This is EMA, not SMA. This is the This is the SMA, not EMA. This is the SMA version, not the EMA. I haven't done the EMA one. Maybe I'll just save the EMA one for later on. Let me just get this SMA one out the way. Okay, $100 to $86,030, 66% win rate, 158 wins out of 81 losses, 139 total trades. Profit factor is 393. This means for every $1 that we lost, we made almost $4. Sharp ratio could be a little bit better. Max drawdown could be a lot better. The workhorse is the 29%, 28%, and then a strong performer was at 38%. And then bidirectional edge. No bias strategy works both ways. Average hold time is amazing. Concerns. Only 4 trades hit TP1, too aggressive. Consider lowering it to 50% or remove it entirely. Keep TP2 and 3 only. Stop bleed. 51 trades, 21%. We lost $24,000. The average loss was 485. SL may be too tight on 0DTE high gamma. Bruh, remember the other one was 20. So I'm gonna just keep it here or drop it. But let's just keep going. Time stops are unprofitable. 12-minute max hold time may be too long for directionalist moves. So we can drop it to 10 minutes. Let me see. High volatility. The annualized volume volatility was 460. The max drawdown was 64. Huge swing. January started at negative 28%, 3 weeks of drawdown. The late year dependency, 90% of the profits came from October through December. The market regime risk, what if 2025 isn't so volatile? We need to test on 21 and 20. Okay. Best month, strong finish. All right. I want to test on 20 I want to test on 2023 before we do anything. Move to 2024 baseline V1. All right. Crop. Thank you. 2023. So we're running on 2023. Let me just make sure. Oh man, I still kind of want to do it, but I'm not because I want to get y'all up out of here. It's almost about to be 4 hours in. I think I found a strategy that works. So let me finish making this strategy. Let me finish making the strategy, and then once it's Gucci, we are Gucci. So I'm waiting for the back test to load. We're running it on 2023. If I'm north of 50K and the win rate is still north of 65%, we're just going to stamp it and go ahead and create the bot. I'm not going to over optimize this. If we found something that works, let's go ahead and graduate it and get it to paper testing. I think we're on the verge of being able to do that here. So let's see how 2023 works with said strategy. Oh, you know what I can do? What I may do is just drop the whole time. Maybe to like 8 minutes. That'll be the most aggressive one I have. An 8 minute max hold time. Because usually it's like 10. I think the lowest one I have is 10 right now. So I have 10, 12, and 15. And the longest I think is like 28. But that's also like mean reversion shit. Oh. Maybe. I don't know. Because I'm still thinking about this. Okay, never mind. All right, our strategy is running. It's running on 2023 right now, and I want to gauge the performance. So it's coming out the gate strong. It's at $278. First 5 trades. First 6 trades winners. 7 trades. Okay, we have a 7 trade win streak. So let's see what it's at. $400. It's at $582 right now. What month are we in? So let's see if we can get out of January above 500. That's the goal. Can we get out of January north of 500? It is February, and yep, we got out of January north of 500. So let's see how the strategy does. So it's been taking some L's. It's taking a little bit of L's right now. We're giving back way too much of the profit. What I'm thinking is dropping the max hold time to 8 minutes and then dropping the TPs, the take profits. Because we just gave back so much money. We just crossed 500 again. We just crossed 600. So it's at a 6 trade win streak. Oh, you know what? Perfect. Exact game I need. Because I do have a little football game to go watch. And I'm not going to hold you. Y'all have the same. Y'all have a game to watch as well. So I'm going to give y'all some great work. A strategy that is like definitely printing us some money right now. And I'm running it right. Oh, it just crossed 1,000. So what month is this? It's April, and we just crossed 1,000. I mean, there's a couple things that I can tweak just based off what I've learned from the strategy. I think that we can drop the max hold time to 8 minutes, and I can adjust the TP ranges. And then tomorrow I'll create the EMA version of this. Strategies right now is at 1,200, and just at 1,300, and right now I'm just waiting to see how well it's going to perform across for the rest of the year. It is May, and we're at 1,500. So I think again that there are some improvements that we can do. And overall, talking about being able to create a strategy, I think the simpler you go, the easier it is for the return. Because what I just learned, I guess not what I just learned, with the whole shooting star or twin mirror strategy, bro, it's just too complicated. Too complicated. I mean, on the face of it, it sounded fucking great, but like the application, oh man, get out of here. That's one of those things is better in theory rather than in practice, right? In practice, it was a complete atrocity. We just crossed 2000. But in theory, it sounded like it was going to work, right? But in practice, oh man. But again, this is part of the process, and I really am glad that you all are seeing this from start to finish. I created this other SMA strategy in less than 2 seconds. It was literally, fam, less than 2 seconds. We just crossed 3,000. We're oscillating right now between like 28, 2,700, and 3,000. But nonetheless, I think I want to take that moving forward is that we don't need to overcomplicate this, bro. We really don't need to overcomplicate this. So I'm glad it looks like, fingers crossed, Lord willing, that we found our ninth bot. I thought this was going to be the ninth bot, but this one is just going to be a lesson, not an L. It is still an L, but that L is a lesson. So strategies just crossed 4,000. We are in August, and the strategy just crossed 4,000. So let's see. Again, I'm interested in the win rate, the Sharpe ratio, max drawdown, and win rate, max ratio, Sharpe drawdown. I mean, the ending balance, yeah, it'll be nice to see if we can cross that 80 again, but I don't think so, or even 10,000. But again, most important thing is win rate, drawdown, and Sharpe ratio, because I think we have some room for improvement just based off what I'm seeing here. We definitely have some room for improvement. The Dolphins versus the Bills, bruh. All right, strategy just crossed 5,000, so let's see where it closes. Ooh, I would have liked us. Just crossed 7,000. So we're giving back too much money, and I really think these updated changes that we're about to do will pay dividends. All right, just crossed 10,000. Strategy just crossed 12,000. This is interesting, fam. 13. It's in December. We had 13,000, 12,000. Oh, did we just? That's what's up. Oh no. All right, win rate 59%. Sharpe ratio is 28. That's horrible. Max drawdown is 82%. Profit factor, that's horrible. So even though we ended at a 244 trades, okay, there's a couple of things that we can adjust here. All right. Here is 2023 results. Let's discuss. We have a few ideas to adjust parms. Bruh. Come on, man. What the heck is going on right now? Bro, can we just play fucking football, bro? Like, all right. All right, let's go, let's go, let's go. Give me. We want to test lowering the max hold time to 8 minutes. Um, what are the TP ranges? Um, then TP ranges of TP 1, 48, TP 2, 38, and TP 3, 28. What else? What else? What else would I want to test? Um, and then yeah, that's it. Remove TP1. Mm. I really hate when these. Oh my goodness, I truly, truly, truly dislike it when we have. Oh my goodness, I can't even right now. Let me just. Okay, copy. Here is 2023 V1 baseline. Let's move. Okay, beautiful. Python, second chance, baby. Oh, second chance, bt.py 2023. It's just a big. I ain't even gonna say sigh. It's just, bruh. We are waiting for the new backtest to run, and as soon as it goes, it's going to go. So, oh, thank you. Exactly. All right, we're running it on 2023. We've updated our parameters. The parameters are number one, we have a tighter max hold of 8 minutes. Number two, take profit. We have lowered that. And I think those are only three. So max hold time, take profit, max hold time, and take profit. So let's gauge. Okay. 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 What month are we in? We're in February and we're at $700, y'all. So let's see. Huh. I think I need to drop that. Cause like it was profitable, bruh. I think I need to drop it to 22%, from 28 to 22%. Cause I'm seeing this a couple times. Profitable, then move negative. I'm gonna drop it to 22%. Um, okay, hold on. Okay, hold on. And let's update the 28 TP to 22%. Yeah, I know it's running. I know, but you know what? I just had this thought. I was like, you know what? Let me just take it. Second chance BT.py 2023. Okay. 22. Okay. All right, beautiful. So we're running it one more time. I just updated it to 2022. Excuse me, I updated it to 22 instead of the 28% take profit. And let's gauge the results, right? Because guess what? You don't go broke taking a profit. We do not go broke taking a profit, ladies and gentlemen. So we went from 58 to 48, from 48 to 38, and from 28 to 22. Let's go. All right, we're loading our back test. Oh, that was quick. Yeah, the Bucks and the Patriots game gonna be a nice one. All right, we're loading up this back test, and simultaneously, I'm watching the Dolphin game, so I'm not going to hold you. I am going to finish up this work with y'all, but my attention is split right now. Damn, pause. You just fell right in this. That's crazy. That's the craziest. Never mind. Mhm. Even with the time stop, bro. Time stop. Was it ever profitable? No. Time stop. Ever profitable? 9%. Then it just lost. Okay. Time stop. 22. Okay. Stop loss. Stop loss. Time stop. Barely made money. 22%. 22%. See, even though we're at 22%, sometimes we get more, right? So that's why I was okay with lowering it to 22%. It is like a slow grind. I ain't gonna hold you. But we're still hitting. But it's just like, what month are we in? What month are we in? We're in March right now, and we're dancing up. We're just crossed 1,000. So we're just crossed 1,000. We're in March right now. So let's see how the strategy performs for the entirety of the year. We just gave back some money. We're still giving back money. We're still giving back money. We're still giving back money. Okay. All right, so I'm letting the strategy run right now, and to see how well it performs on 23. We've updated a few of the parameters. The max hold time to 8 minutes. I think that's going to be an edge for this strategy, right? So I promise you an edge. That's one edge. Another edge is to being able to make the take profit to work for and not against the strategy if we're only holding it for 8 minutes, right? Another edge is just being able to make sure I want to hold that one. I have one more edge that I'm going to add, but I need you to watch the rest of the video in order to get that edge. And I'm going to apply it, and you're going to see how well it's going to help out the strategy, right? Take it from where it is right now at almost 1030 exit. So let's wait and see. Maybe I won't add it. Maybe this is good enough. I'm not going to hold you. Why be greedy? If you start with $100, if somebody gave you an algorithm and it says, okay, you can start it with 100, then by May, it'll be at 1,700. Would you take it? I don't know. Good work, Ingold. Good work, Ingold. All right, strategy just crossed 2,000, 2009. So the strategy right now, it's working. I mean, it's a slow grind, right? Would you rather, again, we're going, we just crossed 3,000. Okay, let's see the highest trade. Okay. All right, just that it's oscillating right now between 35 and 3,800. So let's see if it crossed 4,000. Oh, damn. Every time it hits that damn resistance of, 4,000 right there. Never mind. We're at 4,300, 4,100. What month are we in? We're in August. We're at 4,000. So let's see what it does for the rest of the year. Good shit, boy. Good work. Good work. It's just those little plays, man. Those little checkdowns that was going to take us from being able to go from 2-7 to 3-7, right? Don't try to force the ball. Go ahead and check the ball down to Achan and let Achan do the work, right? Trust your teammates. Trust the game plan. Trust your offensive line, Tua. We're at 5,000 right now. So this oscillating right now between like 54 and like 48. Go work. Let's go. Let's go. Let's go. Let's go. Let's go. We just crossed 6,000. We just crossed 8,000. All right, come on. Come on. Come on. I love it, man. I love what I'm seeing right now. We're giving back too much money. So that's one thing that I noticed here. See, perfect example. Even though it's 22, we just made 30%. So we just crossed 10,000. What month are we in? We're in November. We just crossed 10,000. I think it was at like 14 something. Oh, can you get to 20? Get to 20. Come on. There you go. Strategy's at 20,000. Let's go. Get to 30. Get to 30. Get to 30. We just gave back 13. Oh, give me 15 more. 65% win rate. So we improved there. Sharp ratio improved. Max drawdown improved. Okay, profit factor improved. So what we did help it. Okay. Yeah, we made I think $8,000 more than what we did before. So let's see. Review and let's discuss. Let's go, baby. Let's go, baby. Let's go, baby. I think we have one or two more back tests to go. Nice run. Nice. Yeah, 4 plays. Let's go, baby. Let's go. All right, come on. Again, I'm a little distracted. I got my Dolphins playing. I'm not gonna hold you. I thought I was gonna be done by this. Done with this strat by then. All right, excellent performance. 79% increase. 5.5% percentage points. 87.87 better. Negative 44 better. 27. Okay. 22 became the superstar. Owed 109. Okay. 20 why worse, lowering it from 28, capture more winners before they reversed. Touchdown. Let's go, Taj. Let's go, Taj. 40, 61, 2.5. TP3 became dominant. Okay. Best month was okay. No, I'm not going lower. I'm not tightening. No. I'm gonna test on 24, and if 24 holds up, yo, we have a strategy ready to go. This is V2 2023. V2. What did I do? Oh, take profit. So take profit and max hold time. Let's move. So we're doing Python, second chance, bt.py 2024. Are you serious right now? Did you? I told you to move it, but you still copied it. You fucker. Move these files here. Move them into the V2 2023 folder, bruh. It is snowing in Chicago. All right, let me go find that Chicago game. That looks like an interesting one. But this Patriots one is too. Oh, let me make sure this is 2024, right? Yep, 2024. 2024. Okay, bet. Waiting for the back test to go. Once the back test go, we go. All right, running the back test on 2024, and as you can see, the starting balance is what? $100. So let's see what it's screaming. Let's see what it's screaming. Again, if it improves it, then what we're going to do is finalize the strategy, and I'm going to get y'all up out of here in another 15, 20 minutes or so. Okay, that's crazy. We just made 28 cents. We had an opportunity to make 20 cents, 20%. How does that make sense, fam? Huh. That's crazy, fam. What month are we in? We are in February, and right now we are at $705.68. So let's see how well it performs. Bring that back. Holding offensive tackle 89. 89 is not an offensive tackle, but you get what the fuck I'm trying to say. Offensive tackle, I think. Never mind. I'm gonna shut up. Strategy's at $1,300. I also have another idea, but again, I'm not. It's at 1,800. All right, so I think the strategy is going to run. So what I'm going to do, let's prepare to create our bot. What I need is a few things. No. What I need is, okay, I need you. Boom. Let's bring the multi-bot usage over. Perfect. And then what I also need to bring over is the instructions on how to create the bot. Is this the instructions? This guide explains the common functions, methods, and patterns used across all trading bots in this code base. Use this as a blueprint to build your own bot. Perfect. So that's that. And I also want to show you an example. Boom. Let me show you the example here. Good work, man. QQQ, is that sniper? Yep. So I want to show you this example. Copy. And then I'm coming here. We're dropping you here. That's your example. And then I have one more file to grab. Or two more files to grab. I need alpaca, and this is for real-time data. We use theta data for the option data. You already know that. What else do I need? Oh, beautiful. Let me just grab these two. All right, perfect. So now we have everything we need to create said strategy. Excuse me, bot. We're at 8,000 and we're in July right now. So let's see where this strategy ends. Let's see where this back test goes. All right, come on, defense. Get off the field, man. Get off the field. That's 2 timeouts. We're at 10K. All right, let's see. We're at 15K. We're at 16, 17, 18, 9. Oh, I thought I was going to keep going. Were we positive? Nope. Thank you. Good shit, Joey Brooks. Good shit, JB. Oh, that's Fitzpatrick. Good shit, Fitzpatrick. Good shit, man. I'm gonna let this run, y'all. It seems like we got a hit on our hands. Let me let this run. And let's see where we end up at. Right now, we're in August. We're at 35K, 38. So let's see where this works. Okay, that's 3. That's 4. That's 5. That's 6. That's 7. Okay, 7 straight over $1,000 trades. That's 1. That's 2. Okay, 2 in a row. 1, 2. Okay, I count this 3, 4. Okay, 4. Not straight before I had a 5. 1, 2. 4,000 is the biggest one I've seen so far. 3, 4, 5, Okay, 5 straight. 1, 2. Okay. 2. Okay, 2 out of 3 over 1,000. So that's 1. That's 2. Okay, 2 out of 3 is not bad. That's 76. Okay, 1, 2, 3, 4. 4 out of 5. That's 6K is right there. We just 94. Can you get to 100? Can you get to 100? Get to 100, fam. Okay, 96,000. So it ain't bad. Win rate approved. Max improved. Sharp improved. Profit factor improved. It looks like we got a hit on our hands, ladies and gentlemen. Review, and let's discuss if we are ready to begin developing the bot now. Come on. Come on. Come on. Bloviating. All right. So I want to say here is V. Proceed to develop bot. V2. V2. More aggressive farms. Let's move this into the new V2 folder you create for 2024. All right. All right, so let's get to building our bot, ladies and gentlemen. Let's get to building our bot. All right. Read, then also review. Here is a reference. Then let's discuss how we are to create for our second second chance second chance bot. We're gonna call it second chance bot.py. Is there a cooler name? Is there a cooler name? No, I'm just gonna call it second chance bot. There's maybe a cooler name, but I just haven't thought of it yet. So yeah. There's probably a cooler name. I just haven't thought of it yet, fam. We're almost done with our bot, man. This is actually kind of great stuff. I'm not going to hold you. Like, we went from teetering to not having a strategy to having a strategy, and now we are basically at the precipice of creating our bot that is going to be running our strategy autonomously for us. So again, I'm excited that you all are seeing this, that you're going through the process with me, and that you can actually see what it takes to actually become an algo trader yourself. This isn't hard, ladies and gentlemen. It just takes a little follow through. Okay. All right, I reviewed all the reference material. Here's the blueprint for creating your second chance live bot, second chance bot, second chance config, second chance position. You already have the back test. QQQ, SMA 5 volume plus momentum, no VIX filter, delta range, weighted, TP 25, max hold time is 8. Okay. First, we need to add a new, because we're using IBKR and we run multiple bots at the same time. So we have to make sure that everybody's using the same connection manager. So that's why we have to update this. Go get some. Touchdown. 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 Touchdown, nigga. I ain't gonna hold you. I gotta celebrate with my team real quick, man. We just got in the end zone. We up 14 on these punk ass Bills. Man, Jalen Waddle on that ass. Let's go, man. Waddle, 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 waddle. Let's go. Um. All right, beautiful. All right, let's proceed to create the files and update the ones we need to. After each step, make sure to test to ensure working and ready to go before moving to the next step. No mocks, no fallbacks, all real implementations. So it's going to compact. I knew that. I need to get IBKR open. All right, let's get IBKR open. Water, 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 water. Let's go, man. All right, IBKR is open. So when you need to test that, that's open. Just speed. It was not double move when you got speed. Just tackle. Just tackle. There we go, y'all boys. All we got to do is tackle. All we got to do is tackle. It's 22. It's 21. 31. Go work. Go work. Let's complete. I'll build the complete bot now. Tackle. Let's go, Brooks. All right, y'all. I'm just waiting for this to compact. So while this is compacting, I'm here. As soon as I see it done, then I'll come back and give commentary. This would happen as soon as I want to get up and watch a little bit more of the game. All right, go ahead and read it. I see the penny for you is currently 7. Okay. Wait. I can see that penny for you is currently the 7. I need to replace it with cents. Okay. Wait, bro. Update and put penny for you back because that is a current bot that is running, and find another range for second chance. Do not just change the configs we have for our current bots we have in place, bruh. Go, man. Another 3 and out, bruh. Get off my field and give me my ball back. Come on. All right. We got all of our ranges. All right, perfect. Now we're moving to the configs. The second chance was added successfully. 1800 to 1899. Penny for you is restored. All right, perfect. Yeah, don't change shit, bruh. Just keep my configs. Oh, my fault. Y'all not even looking what I'm seeing. My fault. Here you go. Y'all should have said something. Here you go. Y'all not looking at what I'm doing. Here's what I'm doing. I'm just updating, or we're creating the bot now for the strategy that we have made. Okay, I can remove these. Unless, hold on, are you copying or are you writing? I think you're writing, so I can remove these. Okay. Python modules can't start with numbers. Let me import it. Okay. Oh, shit. Damn. I didn't think you needed it again, so I deleted it. Let me put it back. All right. Proceed. It is back where it is. All right. All right, waiting on our back test. Okay, here we go. Second chance position. Now let me test second chance position. Let me create a position object. Beautiful. Point. Let me continue reading the bot to see the signal. All right, let's go. We got it. Hold on. All right. I don't know. Hold on. Where is the second chance bot? Okay. Second chance live trading bot, a 0 DTE QQQ option SMA movement strategy. Real time from Alpaca Theta Data. Strategy is an SMA crossover with volume filter price base. Take profits validated. Okay. Features. All right, now let's make sure this is actually working. What I'm going to do, because we run all of our bots in a terminal, what I'm going to do is this, homie. Let me just make sure that y'all can really see this. So there's no Capiana. All right. Give me 1 second. What I'm checking, we're going to be running our bot live real quick so we can see that it works. All right, give me a second. Open that up. Clear, Python. Let me make sure we Gucci. All right, here we go. The bot is running. Beautiful, beautiful, beautiful. So we have our bot running. I need to clean this up, and don't worry, I will. All right. This is okay. It says that the market is closed. That's what I wanted to check for. All right. Now I can go ahead and hit kill, and it'll stop the bot. All right, beautiful. We have another bot created, ladies and gentlemen. We have another bot created, ladies and gentlemen. What I want to do now is update it and add it to our actual sheet. So second chance, read, and then let's add second chance bot to this. Beautiful, beautiful, beautiful. Oh, you can't see. Here's what I'm doing. All right, we are finishing up our bot. Our bot is practically done. Now I just have to document it so I can keep up with it. And then once it's documented, we are done. So we created a bot from start to finish. And I love this for us because we had to pivot real time with the creation of the bot. So that just lets us know that we can do it. And whenever something like this does happen, just pivot again. Right. We're adding our second chance, baby. Okay, second chance bot. Beautiful. Perfect, perfect. Now we have 9 bots ready to go. That's what's up, man. That is really what's up. Like, I'm happy that I was able to not only do it with you all, but you all like were able to see like real behind closed doors the process. Oh, my fault, from start to finish. Again, if I seem a bit distracted, it's because I'm watching my Dolphins right now. So I'm having it updated with our second chance bot. Just tackle. Now let me update the key differences in the other sections to include second chance. All right, we're almost done with updating it. Now let me create a final summary of what we've completed. All right, so it looks like we're done with the updates that we need to do. So listen, I'm excited that you all were able to, just to make sure. All right, beautiful. All tested and working. Updated, new, perfect. We updated it. Okay, perfect. Beautiful, 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 beautiful. Let me just wait for this final update before I sign off with you all. All right, perfect. Ladies and gentlemen, we have finished our work here. Not only have we created a strategy, but we were able to actually live pivot with you all. And I'm like super excited that you are able to see this, and not only see this, but to show you that sometimes at first you don't succeed. Try again. So we have our second chance strategy. It is up and running. It's ready for paper testing. Tomorrow when the market opens, I am going to paper test it live with y'all. I don't know if I'm going to be on YouTube or Twitch, but nonetheless, I need you all to follow with me. I really do appreciate y'all sticking through and being able to watch us create an algo trading strategy. It only took us 4 hours, right? But nonetheless, it is your boy Creative. We will be back at it again with another episode.